Good evening, dear friends. Wish you all a very happy Janmashtami. We are studying on Krishna's birthday. Yes, so let us make it a fruitful session. Okay. So let us commence our topic for today. That is Ind AS 108, operating segments. Okay. One of your disclosure standards, we've already done two disclosure standards. That is, one is related parties and the other is EPS. This is definitely not so complicated as EPS. This is even simpler than related parties. Okay. In the sense, remembering is very less and it's more like a normal theory chapter that we all have to do. Okay. So why is operating segments important from a reporting perspective? Okay. So this is what we have to understand. The next one, what we have to understand is what do we mean by operating segments, and what are the segments that we will have to close, and what does have to be made. So these are the broad things that we are going today. And with that background, let us start our discussion about why do we need operating segments, a disclosure on that. Okay, so let me take the case of Reliance Industries, which is into a telecom, which is into the petrochem business, right? Refineries and those kind of businesses. It is also into retail. It is also into media. Okay, News 18, TV 18, all these entities are part of the Reliance Industries group. Now, let us assume that you have invested in Reliance Industries. So you are a shareholder who has invested in Reliance Industries and you want to know how the entity has performed. So if you look at Reliance Industries Limited's standalone balance sheet, we have discussed this before. If you look at Reliance Industries standalone balance sheet, all these items will appear as investments. Investment in Jio, investment in News 18, investment in Reliance Retail, and of course the petrochemical business, the refinery business is the main item. So that will be a part of the operations. So you will not be very concerned with the standalone balance sheet, because the standalone balance sheet hardly gives you the picture that you as an investor are looking for. So you will then move on to look at the consolidated balance sheet and profit and loss account. Now in consolidated balance sheet and P&L, what will is these investments in Jio, in News 18, TV 18, investment in Reliance Retail, and whatever other you have your various investments, they will all go away and they will be replaced with the net assets of those respective companies. But apart from that, the other important thing that happens, you don't need to make any notes. Okay. I hope the PPT is shared with you, right? It contains everything. So just sit back. We have some questions to do and that's about it. Okay. So no need to make any notes or anything. Just sit back and understand. Now, consolidated balance sheet gives the picture of the assets of Reliance Group, which includes Reliance Industries' own assets, assets of Jio, assets of Reliance Retail, assets of the media subsidiary, its liabilities, all of them will be clubbed together into the balance sheet. So that is one thing that you are going to get. The other data that you are going to get is the profit and loss, the consolidated P&L, something which every investor is very keen. So in consolidated P&L, what are you going to have is revenues. You will be having revenues. Okay. Ind AS 24 beta, there are no notes as such. Okay. I have received some of your doubts. Shiva, your doubt on Ind AS 33, I have still not yet received it. But once I get it, I will respond. Okay. So you would be having revenues from all these items. Okay. Reliance Industries' own revenues, Jio's own revenues, the media's own revenues, retail's own revenues. All these items will be there as a single revenue figure. Then you will have expenses. Okay. Then you will have expenses of all these items, and you will be having the net profit, and you will be having the net profit of Reliance. Now, as an investor, this P&L makes more sense to you, because you now get to know how exactly Reliance Industries operates. You now get to know how exactly is the performance of Reliance Industries Limited. Now, if the data of these individual segments are not given to you, instead, you are given a consolidated revenue figure, which is normally the case in consolidated P&L. You are given the consolidated expenses on the debit side, and you are given the net profit. Now, it becomes very difficult for me as an investor. It becomes very difficult for me as an investor to understand which segment is performing well, which segment is not performing so well, and what are the reasons. Ye to ho gaya. This is from the perspective of a normal shareholder. If I have to talk from the perspective of an analyst, okay, a stock market analyst, for these analysts, after looking at the consolidated balance sheet, consolidated P&L, the consolidated profit figure, the first thing that they jump is to operating segments. Now, why they jump to operating segments information is because there you will have detailed disclosures of how these segments have performed. So you will be having Jio's revenues, Jio's profits, and you will be having the media houses revenues, the media houses profits. Then you will be having the assets of these items. You will be having, of course, Reliance Industries' own petrochemical refinery business. And along with that, you probably having the Reliance Retail's details. Now, why these segments are important for an analyst? The analyst is working in the future. Okay, when he's analyzing what were his past forecasts, and he will compare them with the actuals, and those actuals he will, what is the variance, etc. All those things he will do. But more importantly, he will predict what will be the performance of each of these segments in the future. And if I have to predict the performance of each of these segments in the future, I will need to know specific data of each of these lines of businesses. I just cannot apply a blanket trend to the consolidated revenue figures, because the basis for revenue itself is very different. For the telecom industry, how you recognize the revenue, how you recognize the costs is entirely different. For the retail, the margins play a very important role. For media, your broadcasting rights, all those things will play an important role. For the petrochemical refinery business, the drivers are totally different. The cost margins will be different. The profit margins will be different. And therefore, if these details are not given to us, the analysts, we cannot have a predictive value of how the entity will perform in the future. And therefore, considering both the investors as well as the analyst's perspective, this standard is extremely important. Okay. As I told you, they will immediately jump to operating segments, because that is where you have the number crunching that actually happens. In the P&L, you will give a net profit ratio, GP ratio, but what purpose is that when it is a consolidated figure? In a consolidated figure, you really cannot make out what is my GP ratio correct. Okay, that you will come to know when you look at these individual segments, and therefore you will have to move on to the operating segments data. And that is why Ind AS 108 becomes very important for the disclosure. Okay, the standard is very simple. The standard is not at all technical. It's not difficult. Just you have some thresholds and that's about it. But this is the purpose behind that standard. Okay, you have companies with humongous businesses. Okay, I have taken a very simplified approach to Reliance. However, each of us knows what a behemoth Reliance is. Okay, HUL, for example, all these entities have huge number of operating segments, and therefore the standard gives guidance how exactly we have to do the segment reporting, how exactly we do the segment reporting. Okay, so this is what is the reason operating segments. If I go to the previous regime, that is my Indian GAAP, there was a standard AS 17. There was a standard AS 17. Name was a little bit different. It was named as segment reporting. Okay, here in Ind AS 108, it is operating. Now, there is a big shift in the way the reporting happens in Ind AS 108 vis-a-vis the reporting that happened in AS 17. So, what used to happen in AS 17? What used to happen in AS 17? Okay, Divya, PPT is not uploaded of Ind AS 24. I don't think there is a PPT for Ind AS 24, Divya. I taught directly from the study module, okay, and I made them draw some charts, so there are no data, there is no PPT for Ind AS 24, okay. And Namita, I'm coming to your query in a short while, okay. So when you look at AS 17, how the reporting used to happen, and this you pay attention. Okay, in all there are 4 steps in this chapter. The first step is identifying a particular designation, which I'm going to tell in a couple of minutes. The second is identifying the operating segments. The third is identifying the reportable segments, and the fourth one is disclosures. So if we do all these 4, we are through with this standard. Now let me compare with what used to happen in AS 17 and what is the change in Ind AS 108. So AS 17 was a risk and reward approach, a risk and reward approach. So the finance and accounting team in AS 17 used to look at the various product lines of the company. They used to look at the various, what you can say, businesses in which the company was operating. And when that is done, they would identify which product has different risks and different rewards as compared to others. And those products, you would classify them as operating segments under AS 17. So AS 17 largely dealt with a risk and reward approach. In AS 10 is no. Do not follow risk and reward approach, because who are you to decide risk and rewards? You are the finance and team. You are not the person who is actually on the ground making decisions about the operating act. You are somebody who is closeted in one of the corporate offices, which is actually the case. The finance team is generally in the corporate office of the company. They will do the number crunching under AS 17, but look at the words which are used here. Here we use operating segments. There it was segment reporting. So when you talk about operating segments, a finance and accounting team has certain information, yes, but it will not have so much information as somebody who is actually responsible for the operating decisions of the entity. So we are now shifting from a mere reporting person to somebody who is actually responsible for the operations, someone who is actually responsible for the operations. And therefore, we are going to look at somebody who is known as the Chief Operating Decision Maker. We are going to look at somebody who is the Chief Operating Decision Maker. Okay. Now, who is this Chief Operating Decision Maker? The Chief Operating Decision Maker is that person who is actually responsible for the operations of the entity. He is the one who takes decisions regarding operations. He is the one who is actually going to oversee what are the productions that are going to happen, which product lines are successful. If a product line is not successful, how can we probably reduce the cost, or how can we best our competitors? These are the decisions that the chief operating decision maker takes. And the chief operating decision maker is responsible for two things. He is responsible for allocation of resources. He is responsible for allocation of resources to each of the product lines. Okay. And he is also responsible for performance evaluation. He is also responsible for performance evaluation. He sits somewhere at a senior position. He's the ultimate boss when it comes to taking operating decisions. It could be a person. Okay. I'm not saying it is a designation. It could be somebody who is the chief executive officer. It could be somebody who is the chief operations officer. It will definitely not be the chief financial officer, because the financial officer is mainly concerned with the financing activities and the accounting and finance related functions, but he is not concerned with the operations. The CEO, the COO, or any other designation who is there, any other designated person who does the role of being responsible for the operations, that person is known as the chief operating decision maker. And what is the CODM responsible for? This CODM is responsible for two very crucial functions, that is allocation of resources and performance evaluation. Sir, allocation of resources to what and performance evaluation of what? Then the standard tells, well, he's the CODM. So therefore, the CODM will be reviewing reports, will be reviewing the reports of the various clients. He will be reviewing the reports of what all activities are being carried out, by the entity. And based on whatever products or whatever business lines are being carried out, basis that he will do the allocation of resources. He will do the performance evaluation. He will check what is the profitability on a regular basis. He will check on a regular basis. In other words, if I have to talk in day-to-day language, he is the guy who is actually going to review the MIS reports of the segments that he thinks is a representative of the operations of the entity. And therefore, there is a big shift from the risk and reward approach that was there under AS 17 to the approach that is followed under Ind AS 108. AS 17 told the financial and accounting team is going to identify risks and rewards, and those risks and rewards will guide us to identify the segments. But Ind AS 108 tells us, stop. You do not have expertise in operations. You have your expertise in the financial, accounting, reporting, and planning areas. So you stick to that. We are the persons or the designated person who is actually responsible to review the reports, on a regular basis, to actually allocate the resources for each of these activities, to actually do a performance evaluation. And therefore, basis this categorization, which is done by none other than the person responsible for operations, Ind AS 108 tells us, you as the finance and accounting team will not use your head and do a reward approach. You will directly go to the chief operating decision maker and ask him, ki bhai, what are the segments that you are reviewing? What is the data that you are reviewing? How are you monitoring the operations of this entity? What is the basis for allocating resources and evaluating the performance? How do you do that? And then he will give a list. Well, I evaluate the telecom business, I evaluate the retail business, I evaluate the petroleum and refinery business, and I also evaluate the media businesses, and that's it. You as the finance and accounting team will just take this information and present it in the financial statements. So from a risk and reward analysis, we have now come to a management-based approach. We have now come to a management-based approach. Now, why this management-based approach is important is because the ultimate investor, that is you and I who have invested in the company, the ultimate investor or the persons who are interested in the company, like analysts, for example, these people want to see how the business is performing through the lenses, through the eyes of the management. And obviously, there is nobody who can beat what the CODM sees. The chief operating decision maker, what does he see? How does he interpret the things? How does he make the decisions? Nobody can beat him. Okay. You go to any entity that you have, the chief operating decision maker is like the kingpin in that entity. Okay. Is like the kingpin in that entity. He decides everything that happens in the business, in the entity, right from what should be the amount that is allocated, right from what should be the production targets that have to be met, right from what are my revenue targets, what are my margins, why are my margins declining, or what can I do to improve my margins. All these critical decisions are taken by none other than the chief operating decision maker, and therefore the standard tells us, the finance and accounting team, don't use your head. Go to the CODM, look at what are the segments he has identified, and you will report those segments. So therefore, the first step is identifying the chief operating decision maker. Identifying the chief operating decision maker. Okay. So with this background, let us come to our discussion for our presentation that I have shared with you. Okay. So we have discussed what is the core principle of Ind AS 108, which is disclosing the information to enable users to evaluate the nature and financial effects of the business activities, the various business lines in which it operates, coupled with the economic environment in which it operates. So what is the economic environment in which the entity is operating? Take, for example, a bank like Citibank or Standard Chartered Bank. Apart from the various product segments that it has, like the personal banking, the retail banking, the corporate banking, even in personal banking, you have the normal loan section, you would be having the credit card division. So these are the business activities of these entities. But apart from that, you would be having these banks, these financial institutions operate in across geographies, You have Taj, which is having its IHCL, which has its hotels, not just in India, but even outside India. So the entities which have their segments outside India would be facing a different economic environment, and therefore, when you talk about operating segments, will have to think about it and give the disclosures from the perspective of the business activities as well as the location where they operate. Achha. Now the question arises, just a second please. The question that arises is, sir, is it necessary to have segments? Not necessary. Many of our clients, many of your clients where you would be doing audit, they would be having just one line of business. They would be doing just one activity. And therefore, for them, there is no need for any segment reporting. Yes or no? Because their P&L is the P&L of that segment of that business where they are operating. Their balance sheet is the representative of assets and liabilities of that particular segment. So is it necessary to operate in segments? No. But if you have segments, you have to do the disclosure. Okay. Now, the judgment required for applying Ind AS 108. Whose judgment? You have to borrow the judgment that is taken from the management, which is the chief operating decision maker, Okay. And you will not rely on a particular set of rules rather than relying on a set of rules. That means Move aside from a rule-based perspective. Always remember, and I have taught you every point of time, that rules ko chhod do. Forget the rules. Look at the principle. AS 21 on consolidation. You can consolidate only if you hold more than 50% stake. But Ind AS 103 and 110 tell us that no, not necessary. You can hold less than 50% if you have certain criteria which are laid down. Okay. Move. It is a departure from a rule based. Here also 108. Don't go to the risk and reward approach. Think from the perspective of the management and do the reporting. Okay. So the entity should provide information that is used by the management. So don't give anything else, but use the information that is used by the management itself. You give that information which the CODM only uses it, which will allow the users to understand the main activities, the location, and the performance of those activities. What is the purpose? You want to tell your users how the particular segment is functioning. So what basis will you use? Use the same basis as that of the management. Okay. It allows the users to review the segment information from the eyes of the management. Okay. So from the management's perspective, you are presented a segment report rather than the risk and reward approach. And therefore, it enhances the user's ability to predict the actions or reactions that can significantly affect the enterprise's future cash flows. Okay, so this is the core principle of Ind AS 108. Acha. Now, when we talk about which companies is it applicable to, or what is the scope of Ind AS 108? So, where an entity is not required to present CFS. Okay, when the entity is not required to present CFS, every company does not have a subsidiary. So therefore, every company need not necessarily prepare a CFS. So if it does not prepare a CFS, obviously this is not applicable. So therefore, it is mandatory to do a disclosure of operating segments in the separate financial statements. There will be only one set of financial statements, and therefore you will be doing the disclosure in Ind AS 108 in the separate financial statements. Take for example a company like just an example, ITC. ITC has the cigarettes division. ITC would be having the printing and stationery division, and ITC would be having the hospitality division. Now, are they separate companies? Not necessarily. And therefore, this is just an example. Okay. Therefore, does it need to prepare CFS? Answer is no. And if it does not need to prepare CFS, then you will have to do the segment disclosures in the standalone financial statements that is prepared. In the standalone financial statement that is prepared. Let your queries come. I am just covering some things, and then after some time I will look at the queries. Okay, just let them come, because what happens is, sometimes when I discuss the topic, many of those queries may probably get resolved. Okay, let the queries flow in, don't worry. Okay, voluntary disclosure. Okay, so this is the first thing. Acha, if you are required to present consolidated financials, like a company like Reliance Industries, it has investments in a lot of subsidiaries. So it has to prepare consolidated financials, and therefore in the CFS, it is mandatory to present the segment reporting. It is mandatory, because what happens is, in this case, many times the segments would be structured as separate subsidiaries. Like the telecom segment is routed through Reliance Jio Infocom Limited. The retail division is routed through Reliance Retail Limited. The media is routed through a separate company. So therefore, the various segments which are there, they are routed through different companies altogether, and therefore in the CFS, you will have to present the operating segment report mandatorily. Okay, mandatorily. Why? Because the individual company's identity goes, and then they are all clubbed together as a single reporting entity, and therefore do a segment reporting in CFS. And if you do it in the CFS, it is optional in the SFS. So Reliance Industries standalone need not give you the operating segments report, because in India, it is mandatory for us to prepare the CFS also, mandatory to prepare the SFS also, and both of them will be made available to the investors. And therefore, if the segment report is not there in the SFS, so kya hua? It's there in the CFS. The reader can definitely go to the CFS and review the segment report, and both of them will be presented at the same time. And therefore, it's voluntary here under SFS, whereas it's mandatory in CFS. Okay. So there was a query by Namita regarding is it applicable to only consolidated or not. I think that fairly sets the record. Okay. What needs to be done? Okay. But can the entity do a voluntary disclosure? Yes. Any Ind AS, the disclosures which are prescribed are minimum, but they can go ahead and do a voluntary disclosure. If they do a voluntary disclosure and the title of that disclosure is segment information, if you give the title of segment information, the words segment information are mentioned in the title, then it's mandatory that you follow Ind AS 108. Sir, that means mandatory ho gaya? Not necessarily. In this scenario, if you give the heading like information about operations of various businesses or information about the various business segments, if you give these type of titles which are different from the prescribed title in the standard, then you need not follow Ind AS 108. Okay. Sir, meaning is different. Segment information is the title prescribed by Ind AS 108. So if you use that title, you have to follow the requirements of Ind AS 108. Don't use that title. Use other names. Information about businesses, information about various business activities, information about divisions, information about operations. If you give those kind of headings, jahan pe segment information word is not used, then at that point of time, you can avoid Ind AS 108 reporting requirements. Okay. So therefore, this is what is the scope of Ind AS 108. Okay. So I hope that till now the objective is done, the scope is done, and there is no reason for us to have any difficulties. Let me look at some of the queries. Anuj, good to see you. You were not there for Ind 33, I think. Okay. Good to see you. Happy Janmashtami. Okay. So Shiva Chandran, operating for SFS or only for CFS? That query is addressed. Namita, so why operating segments are required? You can see standalone financials. I have explained that as well. Okay. Shraddha, how to ensure that CODM only carries the work? How to assess that risks and rewards approach is not followed just because the persons assessing are different? Will the results be the same as regards to AS 17? We'll see that a little later. Okay, we'll see that a little later. Okay. Sir, if a company has a significant division inside its factory that has its own manager reviewing its performance, which sells the products outside as well as within the factory, can we as an operating segment? I'll just come to this in a while. Okay, Shiva, I'll just come to this in a while. But as of now, I think the tone is set for the standard. We know what it is applicable to. Just confirm if you guys have got that. Okay. And we also know what are the scope and applications. Yes. Good evening, Geeta. Good evening. Yes. Voluntary disclosure means voluntarily doing. Okay. So if ITC has many subsidiaries, and in the CFS, these are clubbed. So ITC will give the information. Like in our example, you can have a look. Industries has a separate subsidiary for Geo, has a separate subsidiary for retail, has a separate subsidiary for media. But the petrochem business is not a subsidiary. That is the refinery, the petrochemicals and refinery business. That's not carried out by subsidiary of Industries Limited. That's carried out by Reliance itself. and suppose Reliance carries on 2-3 other activities, then they will also be a part of the segments if it is reviewed by the chief operating decision maker. Okay, so to answer your query, if ITT has subsidiaries S1, S2, S3, and separately it has segment 1, segment 2, segment 3, then what does the chief operating decision maker of the ITC group review? Does he review the segments individually as well as the subsidiaries individually? And if he reviews that, then for the purpose of the segment reporting, it will be S1, S2, S3, segment 1, segment 2, segment 3. You will have these separate operating segments. It may so happen that why ITC, even S2, S3, S2 may have various segments. Okay, segment 4, segment 5, segment 6. And does he review S2 division in terms of its segments? If the answer is yes, then probably the segment S1, then you would be having segment 4, segment 5, segment 6, then you would be having S3, and then you would probably be having segment 1, 2, and 3. Okay, so this is how the reporting will happen. You have to look at the chief operating decision maker. You have to look at the chief operating decision maker. Okay. If you use the title of segment information, it's not wrong. If you use the title of segment information, please follow Ind AS 108 disclosures, because then it will be misleading for the user. He will look at segment information and then he will say, this is not as per Ind AS 108, right? So therefore, if it is segment information, Ind AS 108 has to be followed. If you use any other word apart from segment information, you can do the disclosures in your own manner. You can do the disclosures in your own manner. Okay. So this is what is going to be your basis of reporting. This is what is going to be your basis of reporting. Okay. Namita, I hope your query about ITC and various segments is resolved. Okay. And then I'm coming to that. How is operating segment identified? I'm coming to that. Okay. I'm coming to that. Sir, here no classification as to, I'm coming to operations and geographical segments. Okay, just give me some time. What happens is, you people are already smarter. Okay, you're way ahead of me. So, mere ko thoda time do. I will reach to that part where we have multiple categories of segments and how to do the reporting in that. Okay, will come. Just give me a couple of minutes from now. Okay. Now, identification of chief operating decision maker. Who is this fellow? Anuj, I'm coming very. Okay. The second is identify operating segments. The third is determining reporting segments. And finally, it's the disclosure. So you are following a management approach. And the implications are that those business activities which are considered by the management as a separate source of revenue will be considered as an operating segment. Okay. This is the implication, but it's not so simple. You have the analysis which will follow. Okay. The operating results of such segment would be regularly reviewed by the CODM to make decisions about resources allocation and performance measurement. The chief operating decision never bases his decisions on the risks and rewards approach. It's impossible. Okay. Risks and rewards means, suppose you are in the business of manufacturing automobiles, right? And if you are in the manufacturing of automobiles division, then you would be probably manufacturing entry-level cars. You would probably be manufacturing luxury sedans like Tata, for example. It will manufacture Indica, Altroz, all those kind of vehicles for the regular class of customers. It is also manufacturing cars like Jaguar, Land Rover. They have an agreement between them. Okay, it has acquired Jaguar and therefore Tata manufactures those cars as well. And if I look from the risk and reward approach tiny prism, I will only see that both of them are cars. Both of them would have similar risks and both of them may probably have similar rewards in terms of the resources required. What is that? That is the basic thing that we will do. Whereas if you look from the operating decision maker's perspective, the Jaguar is a luxury sedan that caters to probably the ultra-rich, ultra-high net worth individuals who will buy those cars. So the class of customers is totally different. And therefore, the chief operating decision maker would probably evaluate the passenger car segment and the luxury car segment as two separate segments in themselves because the class of customers differs. So you will never have the CODM who follows a risk and rewards approach. Never. Because he is concerned with on the ground facts. That is how he is performing. So therefore, it becomes critical for us to identify who is the CFS, who is the CODM. Sorry. Okay. So in this case, segment 1, 2, and 3 will be reported even in ITC's separate financial statements. It is optional. Okay. Not do the reporting there. Okay. Because you are anyways doing the consolidated financial statements. Okay, Namita. So it is optional. But if you prepare, then yes, you will have to report it in that. Okay, you will have to report it in the separate financial statements. Okay, Namita. So I've done. All right. So now, who is the chief operating decision maker? First step, very crucial. Who is my CODM? First thing is a function. It is a function. It is not necessarily a person or a designation. Although I tell you that it could be the CEO or the COO, it need not necessarily be these individuals. You go to a small entity to whom Ind AS is applicable, you may not have these designations like Chief Operating Officer or Chief Executive Officer. There may be a designation like a General Manager, for example, who looks after the operating activities. Then that General Manager will become your Chief Operating Decision Maker. It need not even be a single person. In that small entity, there may be a group of directors who are actually overseeing the operations, who are actually looking after how the entity is performing, who are actually making decisions. And therefore, the CODM is not one individual, but that board of directors who is going to take the decisions collectively, who is going to take the decisions collectively. Okay. So the essential thing is look at the substance, not the form. Don't go behind the designation. Go behind what the particular person or that committee is doing. The function involves allocation of resources, assessment of performance, and making strategic decisions about the entity segments. These functions can be performed only by those people who are concerned with the operations, who are directly concerned with the operations. Okay, only those people can do. You ask the CFO to do this, he will put his hands and legs up and then he will say, what do I know? How many resources I have to allocate to Geo? How many resources I have to allocate to media? How will the CFO know? The CFO will only come in the picture after the resources have been allocated. He will then see whether the money spent, is it a capex, is it a revenue expenditure, is it for the year, is it a prepaid, anything is outstanding. He will come after the resources are allocated. But you tell the CFO to do this, he's not a capable person to do this. Okay, it's not his specialization. So a CFO can never be the CODM. What is important is what these guys do. These guys allocate resources, assess the performance, and make strategic decisions about the entity's segments. It could be a person, it could be a group of persons. Designation is not important. But if I have to compare with the corporate designations which exist in today's times, it could be the Chief Operations Officer or the Chief Executive Officer. Okay. So examples of CODM, they could be CEO, COO. It could be a committee like a senior management or the board of directors. But you have to look at what function they are doing. You have to look at what function they are doing. It cannot be just a supervisory board that just approves and or reviews the decision. What happens you have the board of directors who actually take the decisions relating to operations. And then this decision, once they have arrived at a decision, they forward that decision to the supervisory board, a board that is placed on top of these directors to supervise their activity. Now, the supervisory board is normally just going to approve or just review and ask, you can look into these matters. The supervisory board, if I have to give an analogy, is like the president of India. He is like the president of India. What does our president do? Whatever bills are passed by the parliament, he has to give his assent to it. Okay. He cannot put it down. At the most, he can say, look into the matter. But once the parliament takes a decision, once the cabinet takes the decision, the president has to sign it off. So the supervisory board's function is something like that of the president in our legislature. Okay. They have to sign it off. They are just there to oversee that the directors are doing their duties properly. That's it. They do not control the activities. So therefore, the president, the supervisory board will generally not be your chief operating decision maker. All right. And generally, this is the highest level of management. Generally, it is the highest level of management. Reason, it is to ensure correct identification of reportable segments. So this is your chief operating decision maker in simple language. Okay. Now let us move on to the next set. Let us move on to the next set. Can a committee of non-executive directors, we all know who are non-executive directors, can they be the chief operating decision maker? And the answer is not necessarily, because these guys are not involved in resource allocation. You look at non-executive directors. For example, there would be an audit committee. In audit committee, you have two non-executive directors, finance background directors. These audit committee directors do not take any decision regarding resource allocation. So therefore, the audit committee can never be the chief operating decision maker. Okay. Then you have some other non-executive directors who are there, like a director to oversee the corporate governance. These directors cannot be CODMs because their role is related to governance and not to a management role. But suppose a function that is the board of directors, in the board of directors, you are having executive directors and non-executive directors. Now, non-executive directors will only look at governance. They will not look into day-to-day operations. Okay. So non-executive directors are meant for strengthening the governance, corporate governance requirements. Okay. So non-executive directors are there on the board. Executive directors are there on the board. If it is this board that takes decisions relating to operations, if this board takes decisions relating to operations, relating to resource allocation, relating to performance reviews, then the board will become the CODM. The board will become the CODM, even though it is having certain non-executive directors in it, even though it is having some non-executive directors in it. Okay, so this is the highest, it is generally the highest level of management. The board or the chief operations officer, uske upar nobody is there. Okay, you will not have the chief operations officer going to somebody else for permission. He is the guy who ultimately decides what the company should do. The board of directors overseeing the operating decisions, they are the guys who will actually look at the operations. They will not go to somebody else and ask, do you think we should produce more, do you think we should procure more cell phones for trading? That is not what a question they will ask to somebody else. Rather, from the ground, they will get the reports and then they will take a decision that, well, you procure these kind of goods because they are saleable in the market and demand is there. That is what the CODM does. The CODM will never go to the CFO and ask, do you think I should increase my production of a particular item? It's not. The CFO will say, what do I know? You are here to do that decision. You take that. I will see how I can fund that for you. But the CFO will never decide for you. Likewise, the chief operating decision maker will not ask anybody else, should I do this resource allocation? Or do you think this segment is not performing well? Those questions the CODM will never ask, because he is the person who is going to take the decision about that. So when we say highest level of management, don't think in terms of chairman and don't think necessarily in terms of those designations. A managing director could be a chief operating decision maker if he is involved in actually making decisions about operations. If he is involved in making decisions about operations, it's his job. He has to do that, right? And therefore, the managing director could be your chief operating decision maker. The chief operations officer, well, under the MD, if you have these guys, the MD just signs off. He's like the president. But under the MD, you have a CFO, you have a COO. The COO just reports to the MD, and that's about it. The MD does not decide. The MD will tell the COO, well, do what you think's best. And the COO has to take the decision. So the CODM will become the chief operations officer. So will become the chief operating decision maker. So there is no criteria. There is no thumb rule to say the CODM is a particular designation. There is no requirement. There is no such guidelines in the standard. What is there is look at the function. Look at the function and then you take a decision. Okay. So it is identified as a function. It's not identified as a designation. It's not identified as a person. It need not be a designation. It need not be a person. A person without a designation, but still oversees the operations, still reviews, still allocates the resources, could be the CODM, okay? Or a group of people could be the CODM, okay? All right. So that is why you have it, right? So this is where exactly, Anuj, is the video fine? One of the students is saying the video, there is a continuous break in between. Just confirm, is the video fine for everyone? Is the video fine for everyone? Subsidiaries are always separate segments, not necessarily. The subsidiaries may have their own segments, okay? So it's not necessary to have. Yes, Shiva, you will have questions like identifying the operating segments. We are going to come to that, okay? We are going to come to that, okay? Just confirm if the video is proper for everyone, because Jnana Sukirti has said that the video is breaking continuously. Video is going on fine. Okay, so Jnana, I think, you can just refresh the link or watch on YouTube. Okay, just have a look. Okay, all right, fine. So this is a chief operating decision maker concept. There are three small questions on this. This is just for our understanding. Okay. The executive committee of XYZ comprises of three people, the CEO, the COO, and the president. So the executive committee has these three guys. The committee assesses the performance and allocates the resources. Each committee member has a single vote. So now you identify the CODM. Well, each member contributes, makes a decision as a whole, okay? So though they have a single vote, they have to join hands to decide. The job of the executive committee, it is the job of this executive committee to perform and to review the performance and allocate the resources. It's the job of the committee. And therefore, who is the chief operating decision maker? The CODM becomes my executive committee in this case. It becomes my executive committee in this case. Okay. Namita is also facing an issue, but Radha, Shraddha, Sagar, Divya, Geeta, all these guys have said that Kalluri Shri Lalita, right? So this student also said that video is fine. So just have a look at your end, guys. Okay. Just give me a 1 minute. Just give me a minute. Okay. Somebody at the door. Just give me a minute. Sorry for that interruption. Yeah. So, ठीक है. Thanks, Anuj. Okay, so sorry for that interruption. Yeah. So all three are CODMs. के बदले what we can say is the executive committee is the CODM because the committee decides, and when the committee decides, in that sense, you will take the decision of the resources from a committee's perspective. So your CODM is the executive committee. It is the executive committee. Okay, so all three bolne ke badle you just say that the committee itself is the CODM. Now the same facts as above, except that the president can override the vote of the committee. So now identify the chief operating decision maker. The committee comes to a particular decision. All of them have voted. The CEO has voted, the COO has voted, and the president himself has voted. Okay. Now, the president's vote will override that of the others. Okay. So if the CEO and COO decide in a particular manner, the president will stand above them and say, no, I will do what I want. So who is responsible for the performance and allocation? Sir, in this case, it is the president who is responsible, and therefore the president becomes the chief operating decision maker. Okay, because his vote overrides the vote of the committee. That means who takes the decisions? Ultimately, it's the president who takes the decisions, and therefore the president becomes my chief operating decision maker. And the third case, facts are similar to question 1, except that there is a supervisory board which reviews the operations of the executive committee. It just reviews. Reviews means what? It just goes through what all they have been doing, and that's it. They do not take any decision. The supervisory board is just like a school teacher who reviews your work. Okay, who reviews your work. Ultimately, the school teacher cannot come home and direct you to say, for example, do your homework. That is not what the school teacher will do. You do your homework or not, that will be reviewed by the school teacher. Likewise, what decisions the executive committee has done, they will just be reviewed, and that's it. It will just see what is being done. The supervisory board will not decide, and therefore here also the CODM is the executive committee. The CODM is the executive committee. Okay. So I hope that the CODM concept is clear. The CODM concept is clear. Yes. So in a nutshell, the first step is identifying the chief operating decision maker. And once we identify the CODM, we have to know that the CODM is not a designation. It is not a single person necessarily. It is not necessarily a designation. It is not necessarily, it is a function. It is a function. Who is responsible for taking operating decisions? Who is responsible for taking operating decisions? That fellow or that group of people is known as your chief operating decision maker. These are the people, or this is the function that looks into the segment of, that looks into the way the segments are performing, that looks into the manner of that looks into how the resources should be allocated. That is what these guys are meant for, and therefore they become my chief operating decision maker. That becomes my chief operating decision maker. Okay. Sir, won't it violate the principle of Ind AS 108 because the president is capable not necessarily. The CEO, the COO, as I told you, Shraddha, don't stick to designation. Don't stick to CEO, COO. CODM is not a designation. Okay. Don't come above the designation and look at the substance. In question 2, I have the president. Under him, of the CEO, COO. Whatever these guys decide, whatever these people decide, it can be vetoed by the president. Vetoed means he can put his authority over them. Okay, he sits above them. So this is the fellow who is actually allocating the resources, who is actually reviewing the performance. These guys are just kind of assisting him. They are just kind of assisting him. So who is the ultimate person in question 2? The ultimate person in question 2 is the president. Is the president. Okay. So don't stick to the fact that CODM should be the COO. It's not written anywhere. Okay. Look at the substance. Ind AS about substance. It is less about the legal form. It's less about the legal form. Okay. So ये तो हो गया chief operating decision makers. Okay. All right. The next step that we have is identify the operating segments, which is important. Once I identify the chief operating decision maker, this is where the topics will now move from a theoretical discussion to a more exam-oriented discussion, which is where you will now have to decide. Okay. So the first thing that you will do is you will assess, even in practical life, whether the component generates revenues and or it incurs expenses. So any component that generates revenues along with expenses, or probably only revenues, okay, including revenues and expenses relating to transactions with other components of the same entity. That means when I talk about revenues, it is specifically asking inter-segment plus external revenues. Inter-segment plus external revenues. Does your component actually do these operations? Does your component generate revenues? The revenues could be internal, the revenues could be external also. Okay. Like for example, you have a company which is having a segment A and a segment B. Now segment A's output is 10% sold outside and 90% it is sold within. It is sold within. That means 90% is transferred to B. That means 90% is transferred to B. But it is a revenue, right? When you look at the segment records, there is a transfer entry from A to B. And therefore, even inter-segment revenues, if they are there, then you will have to check, you will have to say that, yes, the revenue criteria is met. The revenue criteria is met. Sir, if entire 100% is transferred within, then to ye segment nahi hoga na, because you look at the next. If there are no revenues, then it is not an operating segment. So there must be at least some amount of external sales, at least some amount of external sale. Okay. Again, threshold is not prescribed. It's a matter of judgment. But yes, it could be internal plus external, both of them. It could be internal plus external, both of them. Okay. So this is a yes. All right. The next question that you ask is, are the components results regularly reviewed by the CODM to make decisions about resource allocation and to assess its performance? So do these activities happen on a regular basis? That means, are they reviewed regularly with respect to taking decisions about resource allocation and assessing the performance? If the answer is yes, ask the third question. Is discrete financial information? Discrete means what? Discrete means separate financial information. Separate. That means each segment has, you can identify its assets, you can identify the segment liabilities, you can identify the segment costs, the segment revenues. Is this data available for analysis? If this answer also is yes, then it becomes an operating segment. So for the purpose of it to become an operating segment, all the three conditions have to be satisfied. All the three conditions have to be satisfied. Whereas for the purpose of it not to become an operating segment, it is an OR. It is an OR. Okay. So does the segment have revenues? If the answer is no, it is not an operating segment. It has revenues, but the CODM does not review it. Then it is not a segment. The CODM also reviews, but discrete financial information is not available. Then also it is not an operating segment. Okay, so these are all OR criteria for the negative, but for it to be categorized as an operating segment, then yes, it will be regarded as an operating segment in itself. Okay. Now, if A transfers 100% of its output to B, then we cannot say that it is a segment because there is no revenue generation outside. There must be at least some amount of revenue generation with external. Threshold is not fixed, but it is a judgment call that has to be taken. Okay. Now, if A is transferring to B at profit, it can transfer at profit, it can transfer at loss, it can transfer at variable cost, it can transfer at variable plus a percentage of fixed cost, it can transfer at total cost plus markup, it can transfer just at total cost. Whatever cost it wants, it can transfer. But as long as there is a small percentage outside revenue, it means it is a revenue generating segment. It means it is a revenue generating segment. Doesn't matter at what price you are doing inter-segment revenues. That's not the criteria. There must be little bit of external revenues. Internally, whatever you do is fine. No problem. It will be an operating segment. Okay. Now, the next question that arises. Revenue, I told you. There must be at least some amount of external revenue. Thoda sa to the sale must be outside. That means to external customers. Okay. Then only it becomes a revenue segment. Okay. Let us do it with the help of an example. Okay. Now, let us take a company that is into ore mining. It is mining the ore. And once it is mining the ore, it is manufacturing steel with the help of that ore. Okay, it is manufacturing steel with the help of that ore. And ultimately, the steel is sold to external customers. The steel is sold to external customers. All right. Now, suppose this ore that is mined, if this ore were to also be sold outside, if this ore were to also be sold outside India, outside the company, that means to external customers. Outside means not outside India, outside the company, that is external customers. Then what does it mean? We can call the ore mining division as a separate operating segment, However, nothing is sold outside. Nothing is sold outside. Whatever ore I mine, I use it entirely for steel. In that case, what is your activity? Your activity is not mining the ore. Your activity is steel manufacturing. Ore mining is the way where you are generating your own material for manufacturing the steel. And therefore, you have only one segment, that is your steel, and not ore mining, because ore is not giving you the revenues. So therefore, there must be some amount of external revenues at least some amount. And how much should that be? The standard has not described, but it should be either entirely external. If it's entirely external, excellent. Okay. But if it is internal, then there must be some external sale definitely for it to be categorized as a segment. Okay, so Sri Ranjini, I hope you have understood that. Okay. Any example where the financial information of a component is not available? It is a rare condition that will happen. It's rare. It's very, very rare. Okay. If I have to think about it, give me some time. Let me see if I can think about it. Okay. In the course of the session. Okay. Now, outsider would include associate, definitely. It would include, it could include the subsidiary, not necessarily the subsidiary, okay, because the subsidiary is a part of you in the consolidated financial statements, where likewise the associate is not your part, okay. The associate is not your part because you show investment in associates separately, okay. You do not take associates revenues into your own revenues, okay. So therefore sale to associate is fine, but your joint venture and even subsidiary is not permitted, because subsidiaries results are ultimately integrated with your own results and presented. So sale to subsidiary becomes more like an internal revenue. Okay, and your joint ventures also, you would be following the equity model. So those revenues will not be integrated, so they can be considered. Okay, so this is what is your query, Manan, right? So financial information, let me see if I can think about it, okay? Because discrete financial information of component is not available means that operating segment won't be reported. It won't be visible in any of the reported company's financial statements, okay? So I have to think about it. Let me think about it, okay? All right. Now, can cost center be a segment? Just understand, suppose we think about the administrative and payroll function of an entity, right? Now the HR or the administrative cost center. Now the CODM will review the operations of these centers also. The CODM will see whether so much manpower is required, whether they are performing their job well. So he will definitely take decisions relating to hire and fire if he wants, okay? If that is the way the organization is structured. But are these guys giving you revenue? Does the payroll department, does the administrative department give you revenues? Answer is no, they do not. And therefore, will pure cost centers be different operating segments? Answer is no, they cannot. Okay, they cannot. Okay. Now, the next thing is, what if raw materials or inputs are used for captive consumption? That is exactly what I told you. No, this ore mining is my raw material for steel. So I mined the ore. I mined the ore. I have a mine. From that mine, I mined the ore. That ore, I did the cleaning process and I transfer it entirely to my steel manufacturing division. It becomes an inter-segment revenue. If I do only this job of mining the ore for my own captive consumption, then well, this steel is the only thing that I'm manufacturing. The ore mining is there. I'm manufacturing for myself. I'm not manufacturing for somebody else, right? So therefore, the ore mining is not giving me revenues from outside. It's used entirely. It's more like part of the steel manufacturing process. So therefore, there is only one segment in that case, which is my steel segment. Okay. And therefore, steel becomes your operating segment. Okay. If this ore is sold to employees, okay, suppose your employee also is into the same business, just a hypothetical example, then well, you are going to recognize the sale to the employee in your books. So therefore, if it sells to the employees, it is an external revenue. That point of time, ore mining becomes a separate segment. Steel becomes a separate segment if you are evaluating the two separately from the perspective of the chief operating decision maker. Okay, so that is how you can look at it. At the same time, as Anup has asked, In the course of ore mining, there may be certain amount of scrap that is produced, certain amount of wastage that is produced, and that wastage is sold outside. Now that product, that byproduct, is a part of your operations. And if you are selling it solely to the outside market, then well, you are having external revenues by sale of byproducts. And if you are having external revenues by sale of byproducts, definitely it is an external revenue. You will be reviewing. Definitely for byproducts, you will call for the prices, you will do the pricing, you will factor it, and then you will sell it. If it is a scrap, you will ask for quotations, you will determine which is giving the highest quote, because that is what you are interested in. And therefore, if this is the scenario, well, it does become a class of revenue, and therefore the ore mining could then be treated as a separate operating segment. Okay, as a separate operating segment. Okay, cost savings cannot be treated as revenue. Cost savings cannot be treated as revenue. Okay, all right. Why the CODM review is required? Because they review to divide the segment based on resources. So they review the overall position, even the segment which may not be considered as a segment finally. See, understand the situation. Okay, if the CODM's objective is only steel manufacturing, he will review all the operations from the perspective. He will review allocation of resources for manufacturing steel. He will review the performance of steel. He will not focus on ore mining at all. It's not his business. It's not his business to review ore mining's financial performance. He will look at how much ore is needed for steel, but that is the limited perspective of ore which is going to look at. Okay. However, if the entity is also engaged in selling the ore outside, okay, if the entity is engaged in selling the ore outside, then well, you will have to look at it from that perspective also, that since I am selling the ore outside, I am interested in it to make profit out of ore sales also. And therefore, it will be treated probably as a separate segment, okay. So now the item that we now have is identifying the operating segments. Does it generate revenue? Yes. And you ask the question, are they reviewed regularly? Yes. So then you ask the question, is discrete financial information available? Yes. Then would be an operating segment. However, does it generate revenue? No, then it's not. It generates revenue, but the CODM does not review it. So here it is a yes, but here it may be a yes. Okay, it generates revenue, but my CODM does not review it. So here it is a no, and therefore it is not an operating segment. However, here also it may be a yes, but there is no financial information available. There is no financial information available, and therefore it is not an operating segment. Okay, Anuj. So I hope you have understood that. So did we understand how operating segments are identified? Yes. Cumulative conditions for step 2 means yes, you have to meet condition 1, you have to meet condition 2, you have to meet condition 3. Only then the component is an operating segment. Only then the component is an operating segment. Okay. All right. So this is how the evaluation will proceed. This is how the evaluation will proceed. Okay. Have we understood the second step? Yes. Have we understood the second step? Yes. I'm coming to that, Namita. I will come to a cash generating unit in a while. Okay. I'm coming to CGU in a while. Okay. All right. Fine. ABC Limited manufactures and sells healthcare products and food and grocery products. So 2 types of products. 3 products are manufactured, namely A, B, and C. Product A is classified as healthcare. So A is healthcare, and B and C are classified as food and grocery. So food and grocery. Okay, next. Discrete financial information is B and C are similar products. Discrete financial information is available for each of the manufacturing locations and for the selling activity of each product. Okay. There are two line managers responsible for manufacturing activities of A, B, and C. X manages A, whereas manager B it should be अच्छा ठीक है B है तो ठीक है B manages products B and C. The operating results of healthcare products, that is product A, and the food and grocery products are regularly reviewed by the CODM. Identify the reportable segments of ABC Limited. Okay. So we now come to the question. I have products A, B, and C. Now, it so happens that A is in the business, the product of A is a healthcare product. The product of B and C is a food and grocery product. We'll come to that, Anuj. That is a very important part to discuss if there are 100 segments. So there is a point that we will have to discuss. Okay, we'll come to that. Okay, healthcare, food and grocery. All right. Next one is, second point is you have manager X and here you have manager B. Okay. The third thing is discrete data is available. Financial data is available. And the fourth point is the CODM reviews A independently and the CODM reviews B and C also. So what do you think are my segments? Do you think it is healthcare and food and grocery, or do you think it is A, B, C? What do you think? Is it 3 segments, or is it healthcare, food, grocery, 2 segments? What do you think? Give me your answers. Give me your answers. Give me your answers. Right? What do you think? Do I have 3 segments for each of the products, or 2 segments, that is healthcare and food and grocery, and why? And why? Why do you think so? Okay. Chalo, punch in your answers. Quick. See, if we get stuck in lot of practical scenario discussions, standard today, Vijay Rajeshri is not there. She used to be there for all the sessions. Don't know why she's not there. Anuj was not there earlier. Aaj aage. All the 3. Namita is saying all the 3 are there are 3 segments. Radha is saying there are 2 segments. So if you can, I mean, it's difficult, but if you can say, why do you think there are 2 segments? Or if you can say, why do you think there are 3 segments? Try to punch in that answer. Okay. If you can. Okay. Otherwise, I will definitely give the answer. Not a problem. Okay. 2 segments. Namanan is also saying 2 segments. Sagar is saying 2. Any other answer? Shraddha, what do you think? Shraddha's one question is pending to answer. I'll answer that. Okay. Sir, if food and grocery data is clubbed, then only 2. That is Kalyani's data. And even Datta Ravi Teja is saying 2 segments are there. Okay. So majority are answering that 2 are there. And what is the reason you guys think 2 are there? Why do you think there are only 2 segments? You guys may be spread across, but your thought waves are synchronizing with each other, right? So if one of you tells me the answer, I think you should be able to let me know. You should be able to give me. One of you tell me, why do you think 2 segments are there? Rasika also says 2 segments are there as there are 2 CODMs. No, CODM दो नहीं हो सकते. Okay. Normally it is only one, but multiple, very rare. Okay. It's very rare, but that is fine. Okay. All right. There are no 2 CODMs. It's one CODM only. Okay. Food and grocery is the same line of product as what Anup Kumar Gupta is saying. Suraya also said 2 segments. And if we think on the lines that food and grocery is the same line of the products, then this is a wrong thought process. Okay. You have to look at, is only one CODM. Okay. Is only one CODM. It's not 2. Okay. So chief operating decision maker. Chief operating decision maker. The CODM, look at the words in the question. Look at the words in the question. Remove all of these annotations. You look at the words in the question. The operating results of healthcare products and food and grocery products are regularly reviewed by the CODM. It's not a product-wise review that is being carried out. It's not a product-wise review that is being carried out. It is a review based on the type of products, that is healthcare and food and grocery. It's not because B and C are similar products. Suppose they had told B and C were not similar. Suppose they had to tell that, for example, if they had to say that B is Ashirwad Atta, for example, okay, flour, and C is biscuits, for example, then it becomes food and grocery. But are the products similar? Answer is no, they are not. Biscuits are a totally different item and flour is a totally different item. In spite of that, they come under the broad category of food and grocery, and the CODM reviews not B and C individually. He reviews food and grocery products together as one segment, and he reviews the healthcare product as a second item. He's reviewing the class as a whole. He's not reviewing the products as a whole, and therefore we have 2 segments. Okay, so Namita, it's not 3, though 3 products are there. As many products are there, I cannot have those many segments. Okay, so definitely there will be a basis for arriving at the segments. We will see the criteria later on. But yes, because the CODM reviews the category of products, it is the CODM's view that we have to follow. And therefore, according to him, the resource allocation is done for healthcare and food and grocery. So I have 2 segments. Okay, that is right. The manager is doing the decisions in 2 segments, only. Okay, it's not because it's not 3. You cannot say there is discrete financial information available for 3 products, so there are 3 segments. We cannot. Let us assume you have a company like HUL, for example. HUL's products are I cannot even count the products which I have in HUL. Okay, they are into washing, they are into soaps, they are into name any FMCG product, and you have your HUL in that. Do you think for each product they will be having a separate segment? Answer is not necessarily, right? Because many of their products can be clubbed together. It all depends on how the CODM reviews it. So therefore, here the results are regularly reviewed from the perspective of healthcare and food and grocery. And that is why we have 2 segments, not 3. Okay. This information is available. Well, that is not the basis for deciding, right? Information may be available for each product also, for all that I know. But that is not the basis for deciding the number of segments. Who decides? The CODM decides based on his understanding. And you cannot question the CODM. Okay. The CODM is like वो भगवान के बराबर है. Okay, he is almost standing on the same pedestal as God when we talk about operating activities, and therefore you have 2. Okay, now I want you to go through illustration 2. It is simple. Okay, I'll be skipping some theoretical illustrations because that is normal ones. Okay, segment manager you can go through. Okay, so let us move on to the next question. I'll be doing just some questions. Some of them are purely theory. When you should be able to understand, because I want to focus more on some of the practical questions that come. Okay, it is the same CODM beta. Divya, there are no 2 CODMs. Okay, there are no 2 CODMs. It is the same CODM. Let us give this the name. Let us give it your name only. Suppose the CODM is Divya. Okay, you yourself are reviewing healthcare. You yourself are reviewing food and grocery. Okay, so it's one CODM who has to decide how much to allocate to food and grocery, how much to allocate to healthcare. And in your opinion, you are having 2 segments. Okay, so the same CODM, the same CODM. Okay, Divya. So I hope you have understood. I hope you don't mind me taking your name. Okay, because I thought that was the best way you would understand. Okay, if I have hurt your sentiments, I'm sorry about that. Okay, but I thought that was one of the same. We could we could understand better. Okay, all right. X Limited is engaged in the manufacture and sale of 2 distinct type of products, A and B. Okay. X Limited supplies the product in the domestic market in India as well as in Singapore. So it is having 2 distinct products, A and B. It is having sales that happens in 2 markets, that is one in India and the other in Singapore. There are 2 regional managers responsible for manufacturing activities of A and B worldwide. Okay, and also 2 other managers. Okay, somebody else responsible for the geographical areas. So there are 2 guys who look at the product, 2 guys who look at the locations. For internal reporting purposes, that means this is your MIS. X Limited provides information product-wise as well as location-wise. So MIS reports, if you guys understand corporate language, which you would, many of you are probably working in big firms and maybe doing industrial training, you know what are MIS reports. So MIS reports are going to be in this question product wise also, location wise also. Okay, the CODM regularly reviews the operating results of both the sets of components. So how should X Limited identify its operating segments? How should X Limited identify its operating segments? What do you guys think? Okay, how should X Limited identify? Okay, so Divya, I hope it's understood. Yes, there were 2 questions earlier, 2 managers. We'll see that later. Don't worry. Okay, we'll see that later. Okay, so tell me now quickly. How should X Limited identify its operating segments? Should it be location wise? Should it be product wise? What do you guys think? What do you guys think? Okay, what do we think? 2 managers were mentioned. Let me just have a look. You let me know the answer. Meantime, let me check. Okay, there are 2 managers. Don't get confused with the manager part in the earlier question. Okay, you have to look at the decision maker. Okay, so I hope you've understood that. Fine. Come on, tell me. Should it be product wise? Should it be location wise? Or is it both? Correct. Yes. So normally, this is, I'm just, kind of deviating. Okay. I'm just kind of deviating from the discussion to give you an example. Suppose there is a CODM. The same example, but I'm making it more illustrative. There is a CODM, and this CODM is of the two products A and B. So you have those two managers. Who are the managers? Manager A and manager B. Manager of A, manager of B. And this fellow will be looking after India and Singapore. This fellow also will be looking at India and Singapore. So first preference is for the product, and then you go for the location. If this is how the evaluation happens, this is the first criteria. The second criteria is I have Singapore head, I have a Singapore head, I have an India head. Now Singapore head looks after A and B. The India head also looks after A and B. Or they may be having managers who report to the Singapore head, managers who may report to the India head. These heads will report to the CODM. This is the second case. Now you tell me, what becomes my segments? What becomes my segments? If you look at the core principle of the standard is that you have to give information about the operating segments as well as the economic environment in which they operate. So here I have two business segments, distinct products A and B. So that is definitely one segment, as well as two different economic environments in which they are operating. The products are saleable in India as well as in Singapore. So location also becomes my different economic environment, and therefore that also becomes your segment. So I have two types of segments now. The first one is based on products. The second one is based on location. The second one is based on locations. So now we are having two segments. Sir, which one will be reported? It depends on how the CODM reviews the segments. If he is reviewing it product wise, that means he is probably placing importance on the business lines. And therefore your primary segment will be the businesses. It will be the businesses A and B. So you have two segments, A and B. But you also have to disclose the economic condition, and therefore you will be having the two segments, that is India and Singapore. Who is having the attention of the CODM? Who is closest to the ears of the CODM? CODM के कान के नजदीक कौन है? It is the managers of A and B, that is the business managers. The product managers are closest to CODM in the first case, and therefore in the first scenario the primary segments will be the business segments, the secondary segments will be the locations India and Singapore. There is a role reversal in the second case. Who's closest to the CODM? It is the country heads. Okay, कौन CODM के कान के सबसे नजदीक है? Who is closest to the ear? The Singapore head and India head. So the CODM will get an idea of how Singapore region is performing and how India is performing. And then he will get an idea of how the products are performing. So here the primary segments in this case would be India and Singapore, and the secondary segments would be A and B, and secondary segments would be A and B. It's not that only A and B are reportable or only India and Singapore are reportable. The question is not a direct one. They have slightly modified the question. Okay. So if this is the way you are having your managing structure, who reaches out to the CODM? If it is product wise reach, then well, the primary segments are A and B. different items, and the secondary segments will be India and Singapore. Both of them will be reportable, but there will be a change in the operating segment report that we will be preparing. If you look at the CODM in the second case, you have Singapore head, India head. So location becomes the primary segment and products become the secondary segment. Products become the secondary segment. Okay. So if we look at, yes, so Kalyani is right. So Kalyani is right. Yes. So geographical wise, as environmental operations to be reported, yes, but also you look at the businesses also. You look at the businesses also. So we cannot really say that only geographical or only product wise. Okay. It will be both, because if you look at the core principle, it's business as well as economic environment. So therefore, both of them are reportable. What gains importance is what the CODM places emphasis upon. Okay, it's very, very subjective. That's right, Anuj. It's very segment. It's very, very subjective. Okay, you won't get such kind of extremely subjective questions. Okay, fine. If there are many segments and one CODM is not able to review all of them, okay, if there are many segments and one CODM is not able to review all of them, yeah, they can have another CODM, but that practice is normally not very much prevalent, but you may have multiple CODMs also. It is possible, okay? It is possible. I won't say no. That point of time, one CODM will not consult the other CODM. Do you think I should allocate more resources here? That he will not do. He is focused on his line. The other CODM is focused on his line. Okay. So take for example your big fours that have deals and advisory division. They would be having financial accounting and advisory services division, the audit and assurance services division. Each of them will be having their partners, right? So these partners, you can call them as CODMs because they will look at how their operations are running. So yes, in terms of the CODMs, there are multiple CODMs, but it happens in very, very large entities. Okay, it happens in very large entities. All right. So Shiva Chandran, any option which we choose would contradict the principle of Ind AS 108. Yes, but it does not, because we are reporting both of them. Okay, so it's not getting contradicted. Both of them will be reported. See, ultimately, you have to see, Sri Ranjini, how the CODM reviews the data, how the CODM reviews the segments. Does he review from the basis of the standpoint of the product? If yes, then the primary reportable segment is the business segments A, business segment B. But the core principle is you have to say both. That means the lines of business as well as the economic environment. So the secondary reporting will happen based on location. If the CODM listens first, the hierarchy is such that the country heads are just below the CODM. That means the CODM is placing emphasis on the products later, but on the countries first. And therefore, the CODM is probably placing more emphasis on primary segments and lesser importance on the product segment. So therefore, products become your secondary segment. So this is one way of viewing it. Let me take another case. Suppose the CODM gets MIS reports of the products, each product, that is product A. I'm moving away from the question. Question is answered. It is a dependent scenario. Okay. It depends on these factors. I have two products A and B. I review product A and product B on a monthly basis. I review this on a monthly basis. Okay. Every month I look at the performance. I look at the sales, the cost, the profit generated. What is the inventory in stock? Do I have any perishable inventory? And then do I have to sell it off? And what are the targets for the next month? Every month I do this review for the products. And the MIS for the locations could be on a quarterly basis, or it could be on an yearly basis, or a half yearly basis, If this is the case, then that means the CODM takes the decisions for the products on a monthly basis, means he is more interested in the lines of business, and therefore the lines of business become your primary segment, and India and Singapore, they become your secondary segment. Change the facts. CODM obtains the MIS regarding to locations, and he reviews this performance on a monthly basis. Take, for example, this is the case of a bank like Standard Chartered or Citibank, okay? Or whatever, HSBC, take it in that way. Now, these companies, MNCs, they are more interested in how the respective country is operating. They are interested in knowing how the country performs, and therefore they will obviously review the country performance at a much higher frequency as compared to how my products are performing, because products are standardized products. Okay, so this review would probably be quarterly, would probably be not monthly, would probably be annually or half annual. Okay, annually or 6 monthly. Okay, if this is the case, then your primary segment would be the location and secondary segments would be the products. Here, this is my primary, this is my secondary, location is primary, and this is your secondary. So therefore, whenever there are multiple business lines, whenever there are multiple locations, you will always have two types of segments, that is a primary segment and a secondary segment, and you have to present data for both. How will you decide what is primary and secondary? You, as the person preparing the books, will not decide. You will go to the CODM and ask him, beta, how do you decide which segment is important? Do you decide resource allocation based on products, or do you decide based on location? He will say based on products. If yes, then the products becomes your, if yes, then the product line becomes your primary segment, location becomes your secondary segment. If it is the other way around, he says that, look, I will do the allocation and performance review location wise. The locations are important. Location is your primary segment. Products are your secondary segment. If the CODM says, mere paas time nahi, I cannot entertain people from finance and accounting division, you look at the MIS reports which go to the CODM. You look at the MIS reports. If the product-wise MIS reports are frequently reviewed, they are high frequency, at least a monthly review that happens, then yes, that is probably the primary segment. If the location reviews go on a monthly basis, then yes, the location becomes the primary segment. So it is a very subjective kind of assessment that happens. But yes, the assessment is simplified because you, as the financial reporting manager, will not have to use your head at all. You go to the CODM and directly ask him, sir, what are the segments? You only tell, and you just pick up the data and do the calculations, and that's it. Your segment reporting is done. Earlier, you had to break your head. What are the risk and rewards for A? What are the risk and rewards for B, C, D? You have to decide you had to decide in AS 17 as the reporting manager who does not know head and tail of what happens on the ground as far as the operations are concerned. So that way, yes, the standard is now simplified. Okay, both of them have to be reported. The CODM decides which is primary, and I gave you some of the indicators. Okay, Sri Ranjini, I told that yes, Shraddha's question is answered. Namita, thank you. Kalyani, sir, when you say primary and secondary are both categories, it is the CODM who decides which is primary. That's absolutely right. CODM is the what you can say, CODM is the god of this standard, if I have to put it in simple words. Whatever happens is the way CODM wants. Okay, so CODM is head and tail of this standard. You as the reporting manager will just collate the data and present it. I gave you some indicators as to how you can identify primary or how you can identify secondary. Okay, here monthly or quarterly or half yearly reviews, how it is significant for determining. It is significant. No, see, if you are reviewing product wise data on a monthly basis, that means the product performance is extremely important to you. You want to know results on a regular basis. You want to know the product results on a regular basis. But locations, you are looking just for the sake of an overall picture on a quarterly or yearly or half year. It's definitely not as frequent as the MIS that is generated for product wise. If the location data is reviewed on a monthly basis, then you as the CODM are very much interested in how the country is performing, how your product is performing in that particular country. The country's performance is what you are interested in, and therefore you are reviewing it frequently. It's very simple. It's as simple as saying you like a particular subject. Okay, so you will study that subject more and more. You do not like a particular subject. Just say it was for me. I did not like a theory subject, for example. Okay, so that theory subject I never used to study. When I studied, when exam was close by and I had no option but to study. So my primary area of study would be the practical subjects. My secondary area of study would be something like the theory subjects. Okay, so this is how it is. Okay, this is how it is. As an auditor, could you challenge the CODM's decision? No, you cannot. You cannot, because you will have to ultimately follow the CODM. You are the auditor. You are not operating the entity. You cannot challenge the CODM's decision. But yes, you can challenge the reporting manager. You can yourself meet the CODM, ask his understanding of the operating segments. And if the financial reporting manager has done something else, then you can challenge the reporting manager, but you cannot challenge the CODM because it's not your area of expertise, right? Your expertise is reporting, checking the accounting estimates, checking whether standards are followed. Abhi, whether India is important or product is important, how will you know as an auditor? You cannot expect to know. Okay. All right. Fine. I'll come to that. Okay. So that is done. Let us move on to the next. आप लोगों से बात करते करते हम खो जाते हैं. Okay, I tend to move, get lost. Okay, all right. So illustration 4, try it out by yourself. It's just a small theory question, nothing great about it. Okay, all right. The next one is whether activities of a function are integral part of business. Sometimes pharma companies may have an R&D division, right? Now, R&D division does not generate revenues, but it is a critical part of business. So therefore, if there is discrete information that is regularly reviewed, then yes, the R&D could be an operating segment, despite the fact that it doesn't have revenues. Okay, so as I told you, it's a very, very subjective standard. You cannot really pinpoint and say that this is my segment. No, the facts and circumstances have to be evaluated. Discontinued operations, are they an operating segment? Yes. If it is continued to engage in business activities, you are about to discontinue it, whose operating results are reviewed by the CODM and there is discrete information available, it would meet the definition of an operating segment. On similar lines, is a CGU an operating segment? Is a cash generating unit an operating segment? The cash generating unit is an operating segment if it meets these criteria. That means it generates revenue and it is reviewed by the CODM regularly, and discrete financial information is available. If these three criteria are met, then well, the cash generating unit does become an operating segment. It does become an operating segment. Okay. Who identifies the CODM? It is there as a structure. Okay. It's there in the organizational hierarchy. Okay. Ideally, when you look at any organization, the formal organizations, there is a chart that is there, an organizational chart, okay, which is put for you. You review that chart, you should be able to identify who is the CODM. Okay, it's normally the finance. For the purpose of this, the financial reporting team will identify. Okay, so this is identifying operating segments. Okay, now there was a question that Anuj had asked, and which is a very significant question. Okay, the question was, there may be multi-product companies, multiple business lines, multiple multiple units which run into hundreds of units. Okay, HUL has hundreds of products, hundreds of brands. Okay, Reliance Industries, you name it, and they are there. They are there in toys, they are there in retail, they are there in media, they are there in refinery and petroleum, they are there in telecom. You name any industry and they are there. Okay. So when this is the case, do I report hundreds of segments? And the standard says, wait, you are here to give a report. You are not here to give a thesis to your investors. Okay. So the standard gives an option to aggregate your operating segments. It gives an option to aggregate your operating segments. The aggregation is consistent with core principles. Yes. And do they have similar economic characteristics? Yes. And are the segments similar in each of the following respects? Nature of products and services, nature of the production process, type or class of customers for their products and services, methods of distribution for their products or services, and nature of regulatory environment, that is banking, insurance, public utilities, etc. Okay. So if these things are similar, then you can do the aggregation. If they are not similar, then you cannot aggregate. They will be separate segments. So does it mean we have to disclose all 100 segments and wait? There are still other data, other things which are there in the standard. We will be coming to that. Okay. Shraddha, R&D revenue test fails. But think of it, in a pharma company, without R&D, nothing can happen. Okay, so R&D is critical to the existence of the company itself. And if that is as critical as an R&D center, you can treat it as an operating segment. Okay, discontinuing operations engaged in business activity. Discontinuing operations means you have identified the operations are about to close during the financial year under report. It's a discontinued operation. It discontinued till the end. Okay, so you have identified as a discontinued operation, but during that year, the operation was there, right? And you used to review it separate. So you can identify it as an operating segment. Okay, so don't stick to the rules again. Don't go to the rules. Look at whether the segment is critical to my existence. If R&D is critical to your existence, then well, R&D becomes a critical segment. But if you go for companies like Maruti Suzuki or Hyundai, R&D is probably not a very, very critical segment. Ultimately, you look at any car. Today, if Hyundai comes out with i20 revised edition, you will probably have Maruti bringing Swift and Tata bringing Altroz and Honda bringing out another Honda Jazz on similar lines. That is not R&D, right? That is merely following your competitors' footsteps. So therefore, that is not R&D. R&D is probably not as critical in the automobile sector. whereas it is critical in the pharma sector, and therefore if it is as critical as that, you can take it as a separate segment. You can take it as a separate segment. Okay, so this is the aggregation criteria that you are having. Okay. Please look at these two questions. Theory hai, you should be able to do it. Okay, I am jumping because I have to do other topics. Okay, do this also. It is simple. It's a new question. It's a new question. It's an important one, but easy to understand. Okay, so I think that you should be able to do illustration 7. Again, it's a theoretical question. Okay, it's a theoretical question. You should be able to do it. Okay, whatever questions I tell you guys, see, please sincerely try it out. Okay, please try it out. Don't ignore, because they give you an understanding. It is quite possible you may not get theory questions in your exam, but it facilitates understanding of the standard. So please go through it. Okay, please go through it. Okay, illustration 7. All right. Now, we have now come to the important aspect which concerns us as students. Okay, which concerns us as students. Don't look at revenue, Namita. Don't look at revenue in R&D. R&D is critical to your existence. It's very, very important. You have to look at the quality of scientists who are there. You have to look at the patents that you are generating. You have to look at what is the level of R&D expertise that you have. Because today, if I am somebody who has to buy the drugs for my medicinal requirements, drugs means the medicines. Okay, if medical doctors have to prescribe medicines, they will probably have a look at what is the R&D capacity of this entity. They should. Okay, so if your R&D team is very, very efficient, if it is one of the top teams, why is it a top team? Because you have identified and invested in that R&D. It is a critical activity to your existence, so it becomes a segment. So it becomes a segment. Okay. You can expect, in fact, 10-mark question has come in the exam. So therefore, you can expect, but it is easy. Okay. So we take a break now. We take a 5-minute break. Radha also asked, दीदिया तो चुप ही हो गई, सर ने एग्जाम्पल दे दिया और तो बेचारी चुप हो गई. Okay. I'm sorry. Okay. Don't be hurt by it. Okay. All right. We take a 5-minute break and we shall continue. Take a 5-minute break. Please don't ask too many over the top questions after the break. Okay. Because there are how to report and all those things are there. So we will have a look at that. Okay. So we will have a look at that. Okay. So we take a break of 5 minutes now. Okay. All right. Fine. Welcome back. Again, don't stick to rules, guys. Okay, don't stick to rules. Okay, the fundamental thing, if you want to succeed in Ind AS, if you want to succeed in Ind AS, you must forget the rules and look at the principles. Yes. It is given that revenue must be there for an operating segment. But look at R&D for a pharma company or a software company. Without R&D, can sales ever happen in a pharmaceutical entity? Serum Institute, because it has a very, very efficient R&D division. Today we are having Covishield, and you have that biotech, Bharat Biotech, because of the efficiency. Today we are having Covaxin or Pfizer. Why Pfizer's vaccines are preferred outside India? Anybody who is vaccinated with Pfizer, they easily allow. Why? Because of the efficiency of the R&D that Pfizer had, that has translated into the product's sales. Today, you look at the way Pfizer is charging for its product, right? And therefore, the R&D is critical to the existence of the company. Agar R&D nahi hota, Pfizer would probably not be able to sell even one vaccine outside. And therefore, R&D is integral to business. The CODM of Pfizer definitely has to pay attention to R&D. Otherwise, you will not call him an operating decision maker. And then, where your company's businesses are integral where those segments are integral to the company's businesses, they will be an operating segment even if they do not generate revenues. Even if they do not generate revenues. You can take this as an exception to the rule. You can take this as an exception to the rule. Okay. But that's about it. I'll do that homework question. Okay, Shraddha, I'll do that. Don't worry. Okay. All right. So do these questions. Okay. Now you come to the most important part from examination perspective. Now you come to most important part. So we started off with operating segments. We started off with what are operating segments. After operating segments, we were told that you can apply aggregation principles. Those 5 principles: comparable customer base and similar manufacturing process, similar type of products, all of that is done. Okay. Namita, how R&D again? I tried my best to explain. Okay. How R&D, I told you. Okay. So I hope you understood it. Okay, please watch it again to see if you have understood. Okay, it's critical. Without R&D in pharma, you cannot have turnover. Okay, without R&D in pharma, you cannot have turnover. Understand? Without R&D, a pharma company does not exist. So therefore, it's critical to the business. It's critical. Therefore, you will take it as an operating segment. It is an exception to the rule. It is an exception to the rule. Okay. Itna yaad kar lo, that is enough. Okay. Aggregation principles. Then after aggregation principles, so you are having this kind of a cone-like structure. Ultimately, operating segments could be multiple. You can apply aggregation principles and narrow them down. And after the aggregation principles are also applied, you apply something known as quantitative thresholds. You apply something known as quantitative thresholds. Quantitative threshold. Okay. Now, this is what concerns you and me. Okay. This is what concerns you and me. And once we apply the quantitative thresholds, we get something known as reportable segments. We get something known as reportable segments. And it is these reportable segments that come in your financial statements. It is these reportable segments that ultimately come in your financial statements. Okay. So therefore, you will now have to identify the reportable segments based on quantitative thresholds. Okay. So now let us look at what are my quantitative thresholds. The first threshold is segment revenue. Segment revenue is greater than or equal to at least 10% of combined segment revenue. Of combined segment revenue. All of this is given to you. You don't have to write it down. Okay. The first quantitative threshold is the segment revenue from a particular segment is at least 10% of combined segment revenue. So what do we mean by segment revenue? Segment revenue means external revenue plus inter-segment revenue plus inter-segment revenue. Okay, that means it includes sales made outside the company. So where does this external revenue go? This is visible in the P&L of the company. Where does this go? This is visible in the internal MIS, or what you can say transfers, interdivisional transfers. Okay, I'm sure you must have studied transfer pricing, where you would have studied the various methods of arriving at interdivisional transfer pricing: transfer at variable cost, transfer at variable plus markup, fixed cost plus variable cost, transfer at cost plus markup, all those things. Inter-segment revenue can be any form of transfer. Okay, you need not have a markup, kuch bhi nahi. Whatever you follow in the books, that is what is going to be done. Okay, this is your external plus inter-segment. So therefore, what should be my right hand side? My right hand side also will be external revenue of the company plus inter-segment revenues. Plus inter-segment revenues. Sir, inter-segment revenues to cancel out ho jayenge. They will cancel out, but how will it cancel out? On the P&L, you will have on the sales side inter-segment revenue. Cost side, you will be having received from the other segments the same item of sale, and therefore they will cancel out. So inter-segment revenues will also be available. Inter-segment revenue will also be available. Okay, so this is going to be the first condition. Sir, why do we look at inter-segment revenues? Why do we look at inter-segment revenues? Reason is simple. See, there could be a case where my segment is having a small percentage of sale outside and a major percentage of sale for captive consumption. That does not take away the fact that my entity, my segment is not an important segment. Today, if we come back to the example of that company that is into ore mining and steel manufacturing, 10% goes outside, 90% goes to the steel division. This shows that about 90% of your input goes to the steel division. So therefore, it's a very, very critical division for you, because the steel division's major input source is your other segment. Major input source is your other segment. As the CODM, as much interested as you are in the steel division, you will be equally interested in the ore division. Because the ore division is the major source of material for the steel division. And therefore, you will definitely take decisions about allocation and performance reviews of the ore mining division also. And therefore, inter-segment revenues start to get important. So therefore, whenever you do the first quantitative threshold, then this is what it is. That is segment revenue should be at least 10% of combined segment revenue. They are not saying the P&L revenue. No, this is not the word used in the standard. The word used is combined segment revenue. Okay. The second threshold is segment assets. Segment assets should be at least 10% of combined or total assets. It's not looking at liabilities, it is just looking at assets. Assets, inter-segment, external segment, okay, aisa kuch nahi hai, okay. It is combined assets, okay, combined assets. So this is my second condition. Just a minute. Combined segment assets, okay, combined or total segment assets. Okay, so this is what you will be looking at. Materiality in this standard has been fixed at 10%. All right. And the third one is segment profit. Okay. Now, when we talk about segment profit, let me do a question for you to understand the logic behind what is written in the standard, and then we shall come to that particular provision. Okay, we shall come to that particular provision. Okay, I'll come to that provision, but first let us do a question. Okay, first let me do a question. Where is that question? This is it. Okay, fine. We'll first do this question, understand the reasoning behind what is written, and then we shall come to an understanding of the provision. Okay, we shall come to an understanding of what is the limits which are written. ABC Limited has 5 operating segments. So this is known to you. They have identified the segments, namely A, B, C, D, and E. The profit or loss of respective segments for the year ended 31st March X1 are as follows. So A is 780. B is 1500, C is 2300 loss, D is a loss of 4500, E is a profit of 6000, giving a total of 1480. Giving a total of 1480. Now, based on the quantitative thresholds, which of the above segments A to E would be considered as reportable segments for the year ending 31st March X1? Okay. So let us now look at the fact pattern here. I have 5 segments, A, B, C, D, and E. I have the following figures: 780, 1500, 2300. Don't write down. First understand. I will give you a chance to understand. Writing you can do any point of time. 4500 and 6000. Okay. The total comes to 1480. Okay. The total comes to 1480. Okay. Now, suppose, now please pay attention. This is important. Okay. This is the only thing which is important. Okay. So what is that? The first one is, sir, we had the 10% criteria for revenue. We had the 10% criteria for assets. So can we have the same 10% criteria for profits? And if we apply the same 10% criteria, the story looks something like this. Total profit, segment profit, is equal to 1480 into 10%. So that gives you 148. So any division that has at least 148 rupees of profit will become a reportable segment. And therefore, you will always say that A is reportable, B is reportable, E is reportable. You will never say that a loss-making segment is reportable. Why? Because this, if you just keep it as 10% of segment profits, the standard tends to get biased against negative figures. Because profit can have positive profit also, negative profit also, which is a loss. Whereas revenue can never be negative. You can either have a positive revenue or zero at best. You can never have negative assets. You can have either assets or no assets. So there the story is normal. 10% of combined segment revenue, 10% of combined segment assets. But here when you use the term 10% of combined segment profit, if we had to use the same terms, then these would stand excluded. And therefore, the standard has changed the wordings. The standard has said, and now pay attention. The standard says, well, you look at absolute profits that are earned by the segments. You look at absolute losses that are made by the segments. Okay. So absolute profits is equal to 780 plus 1500 plus 6000. So this is 8280. The absolute losses is 2300 plus 4500. Ignore the sign. Absolute means ignore signs. Okay. Those of you who had taken maths in their 11th and 12th standard, you must have studied the modulus function. Aapko sikhaya hoga. Modulus is like a machine. Any negative figure that you put in the modulus function machine, the output will be positive, and positive number will always remain positive. So this is that concept, okay, absolute concept, okay. So profit is 8,280, loss is 6,200 in absolute terms. Now look at highest of these. Look at highest of these two, and highest of these two is 8,280. Highest or higher of these two is 8,280. Take it as 10% of that, so that becomes 828. And this 828 absolute terms will be the basis for determining which is your reportable segment. Which is your reportable segment? Any segment in absolute terms, if the profit or loss, whatever it is, we are talking in absolute terms, any figure of profit or loss in absolute terms which is more than 828, will become a reportable segment. So therefore, is A more than 828? Answer is no. So A is not reportable under the profit criteria. Is B more than 828? Yes. So B will be reportable. Is C more than 828? Sir, C to loss hai, but who told you to look at loss? Look at absolute figures. In absolute figures, C is 2,300, whereas the absolute figure here is 828. Is 2,300 more than 828? Yes, and therefore C becomes a reportable segment. Sir, is D greater than greater than the threshold of 828? You will say no, D is a loss. Who told you to look at loss? Look at absolute terms. In absolute terms, D is 4,500. The threshold is 828. D is definitely a reportable segment. And E is 6,000, which is higher than 828. So E also is a reportable segment. If we had to just keep segment profits, it would be 1,480. 10% of that would be 148. C and D would never have been reported. Would it give a true picture to the user of financial statements? Answer is no, it would not, because such a huge loss is there. 2,300, 4,500. If you don't report it, the user will go crazy looking at the figures in the P&L. Okay, and therefore these become your reportable segments. You don't look at total profit. You don't look at total segment profit. What you look at is segment profits, number one, or total segment losses, number two. In absolute terms, whatever is higher of that, multiplied by 10%, that will be the threshold for determining your profit. That will be the threshold for determining your profit. Exactly. C and D are also critical for you. As the user of financial statements, you will not just remain happy with A, B and E, but suppose you are the shareholder, you will ask the company, ye to 4,500 looks small for us. We may be drawing a stipend of 4,500 to 5,000. But suppose this is 4,500 crore, then what are you going to do? 4,500 lakhs. What are you going to do? As a shareholder, you will definitely raise questions about that. You will raise questions of 2,300 crores. They become critical to your understanding as the reader of financial statements, and therefore they have to be reported. So how to report? This is the mechanism that the standard has derived. This is the mechanism that the standard has derived. Okay. Look at the profits only. Take that total. Look at the losses only. Ignore the signs. It is positive. Take that total. Whichever is higher between these two figures, take that figure's 10%. That will become your quantitative threshold from a profit perspective. That will become a quantitative threshold from a profit perspective. Okay. So this is how you will identify your segments. This is how you will identify your segments. So if we now look at the wordings in the standard, So this question is done. So which segments are reportable? I did this question because I had to explain to you. But if you look at the threshold, aggregation is done. Yeah. Now look at the basic quantitative thresholds. Okay. Whether the reported revenue of an operating segment, both internal and external, is 10% or more of the combined revenue. Is it 10% or more of the combined revenue, that is both internal and external, of all the operating segments? If the answer is yes, it will become a reportable segment. It will become a reportable segment. Again, these conditions are OR conditions. Okay. These conditions are OR conditions. Okay. So if the revenue is more than 10% of the combined segment revenue, report it. If it is not, look at the next thing, that is profit. Whether absolute amount of reported profit or loss is 10% or more of the greater one, that is higher of, in absolute amounts of the combined reported profit of all the operating segments that did not report a loss, and combined reported loss of all operating segments that reported a loss. So therefore, you will look at higher of, you will look at greater of, the greater of, in absolute terms, the combined reported profit of all operating segments that did not report a loss, and the combined reported loss of all segments that reported a loss. So in our question that we did, all the segments that did not report a loss, A, B, and E, total that up, that becomes the first figure. All the figures that reported a loss, C and D, total it up in absolute terms. Higher of these two in absolute terms is 8280. 10% of higher of the absolute terms figures is 828. That means it is 828. So therefore, if the revenue condition is not met, but profit condition is met, yes, it is a reportable segment. So therefore, these are not cumulative conditions for reporting. These are OR conditions for reporting. That's right, Preeti. These are OR conditions for reporting. If revenue is not met, but profit is met, it will become a reportable segment. If even the profit criteria is not met, is the asset criteria met? 10% or more of combined assets of all operating segments, are they met? Yes. So if this fails, this also fails, this passes, it will become a reportable segment. If this also is not met, the final thing is, does the management believe that the segment information would be useful? If this answer is yes, management is free to report. This is voluntary. This is voluntary. Koi karta nahi. No, hardly you find anybody who discloses it. Okay, so this is voluntary. If this is a yes, report it. If this is also a no, then do not separately report information about the operating segment. Do not report separately. That means what? You will put it under a residual category like others. You will put it under a residual category like others. Okay? So this is your basic quantitative thresholds. I've told you what they are. I think I have told you in as crystal clear language as I could. Okay. So that's about it. Fine. Now you may follow aggregation criteria. Whatever were those 5 aggregation criteria, same manufacturing processes, same customers, same type of customers, similar products, all those 5 conditions are there. You may combine and then check the quantitative thresholds. There is one more principle, which is a 75% revenue principle. Okay. Now let us take an example to understand this. Okay. Suppose I have a company, A Limited has segments 1, 2, and then it has segments 3 to 20. It has segments 3 to 20. Okay, forget the profit threshold, forget the asset threshold. The revenue of the first segment is 800. The revenue of the second segment is 1200. The revenue of segments 3 to 20 is 4000. The revenue of segments 3 to 20 is 4000. Okay. So the total segment revenue, no inter-segment revenues. All of them are external segments. All of them are external segments. Okay. Now I'm coming to that, Kalyani. Okay, I'm coming to that. Okay. So now 800 plus 1200 plus 4000, this comes to 6000. This comes to 6000. 10% of this is 600. This 4000 is nothing but 200 into 20 segments. Each segment has a revenue of 200. So now my quantitative threshold is 600. So based on the data which is given, based on the quantitative threshold that you have just now studied, forget profit, forget assets. Just look at revenue now. So revenue means 10% of combined segment revenue should be there. So now I am having these segments. I am having these, this is segments 3 to 22, sorry. Okay, 3 to 22. So 20 segments. All right. Now my total segment revenue is 6,000. 10% of that is 600. So basis that, my reporting will look something like this. If I follow the language of the standard, A will be reported separately, that is revenue of 800. B will be reported separately, that is 1200, and others will be 4000. And then you look at this. Now this data is presented to you. You are the reader of financial statements. You could be an analyst, you could be the investor, and you are given this data and you very happily receive it, and you want to analyze about the future of this company. You will look at A and B and you will say, fine, the total revenue is 6,000. This represents 1/3, but beta, this 2/3 revenue mein what is there? What is there? You have followed only 10% criteria, which is the quantitative threshold. But in fact, it is making my job more difficult because now I do not know what is there in this 4,000. And is it a material figure? Definitely it is. It is 2/3 of the total revenue. So as an analyst, as a reader of financial statements, it is your right to ask what is there in this 4,000. What is there in this 4,000 worth of revenue? And therefore the standard prescribes a new criteria, an extra criteria. You have identified the operating segments as A and B. Okay, the reportable segments as A and B. Fine. Then you do a next check. All the three criteria are done. You do all those three criteria. You move on the next check. You look at whether you have reported at least 75% of external revenue. This is the next criteria. Have you reported at least 75% of external revenue? Here you will say, kahan report kiya, sir? I have reported only 1/3. I have reported only 1/3 as my segment revenues in respect of A and B. Remaining 2/3 I have put it in others. So therefore the standard says no. If you are not reaching at least the threshold of 75% external revenue, then what you have to do is identify and report additional segment data. Additional segment data till you reach 75% threshold. Till you reach 75% threshold. And this threshold is only of external revenue. This threshold is only of external revenue. 10% threshold was for internal plus external, but this 75% is only external, because then the reader of financial statements will compare with external and see what have you reported. You've not reported 2/3 of revenue. What do you expect to take away from this annual report? So therefore, out of segments 3 to 22, out of these segments, you will report at least 6,000 into 75%. 6,000 into 75%. Your segment reports must have a revenue of at least 4,500, out of which A and B have a revenue of 2,000. So therefore, the remaining 2,500 must come from segments 3 to 22. So 2,500 divided by 20. Sorry, 2,500 divided by 200. You must report another 13 segments extra. You must report another 13 segments extra, because then it makes sense to the reader. Otherwise, ये डेटा देकर भी ना के बराबर है. It is as if you've given the segment report, but it is as if it is a segment report which is worthless, because 2/3 of the data relates to others. Abhi, how do you analyze it? 2/3 others can be anything, sir. Others to kuch bhi ho sakta hai, right? So just because individually they do not cross 10% threshold, we cannot keep them in others. So the standard has given an additional criteria, that is, apart from the basic, once you identify the reportable segments from the basic quantitative threshold, additionally, you look at whether 75% of external revenue is covered. If it is covered, fair enough, you don't have to do anything. If it is not covered, identify additional segments that you will have to report. And you normally start with the highest, because you want to complete 75% fast. So therefore, identify the highest and then arrive at the 75% of external revenue. So what will be your reportable segments here? It will be A and B plus any 13 segments. So this comes to 15 segments. This comes to 15 segments. Okay, you will be reporting 15 segments, and the remaining 7 you can keep it as others. No problem in that. No problem in that. Okay. Now, how to arrive exactly at 75? You cannot. Now, when I report 13 into 200, that is 2,600 plus 2,000 plus 2,000. So that is 4,600 divided by 6,000. So this is 76%. If I report 12 segments, if I report 12 into 200 plus 2,000 divided by 6,000, this is 73%. So 12 segments is 73, 13 segments is 76, extra segments. So you will go for 13. Okay. When I say 75, it is not 75 as a stamp mark. Okay. It is 75 minimum. It may come to, it can go above that, but it cannot go below that. It cannot go below that. Okay. So what you have to do is, first you apply aggregation, narrow down your segments. Then you apply quantitative threshold. Further, you narrow down your segments to the reportable segments. And then you slightly broaden it if at all there is a need to identify whether you have, if you have not met the 75% threshold. So they will become your operating segment, that they will become your reportable segments. Okay. So that is very beautifully summarized by Suraya. Okay. First you apply, I in fact took that summary from her query only. Aggregation first is total operating segments identified by CODM. Apply aggregation, narrow it down. Apply the 10% criteria, further narrow it down. Check if you hit the 75% threshold. If yes, fair enough, don't do anything. Whatever you have identified, you report. If no, keep on adding the segments one by one so that you meet the 75% threshold of external revenue. Once that is met, that will be your reportable segment. 75%, okay, it could be definitely above that, but not below that. Okay, so therefore, slightly take it to the higher side, and after you reach the 75% threshold, you are a free person. Take the remaining in others and complete the segment report. Complete the segment report. Okay, so with that, we have almost done the disclosure, the requirement also. Okay, now it may so happen that a segment may have been a reportable segment in the previous period by virtue of the 10% criteria or 75% criteria met in the previous year. This year, it's not meeting. Okay, so this year there is no meeting. Okay, but in the previous year it was there. So therefore, for continuity, you will have to report it. For continuity, you will have to report it. Okay, so suppose for example, 2019-20 the 10% revenue was met in respect of segment A. Therefore, you would have reported it. Therefore, you would have reported it in FY 1920. When you prepared FY 2021 financials, you have not met the threshold, none of the threshold. I am taking revenue, but you have not met any of the threshold. Okay, so therefore, if it is not meeting the 10% criteria, any of the 10% criteria, ordinarily you should not report. Ordinarily, you should not report. But in the previous period, it was reported. So to facilitate continuity, the reader of financial statement should know that this segment is not even able to reach 10% threshold. So therefore, you will still present the comparative figures. You will still present the comparative figures. So it came in FY 1920 also. It came in FY 2021 also. In FY 21-22, less than 10%. Will you present a comparative now? Answer is, sir, previous year to dikhaya tha na, FY 2021. So show it now also. If you keep doing this, ek baar jo what came once in the segment report will always continue to come in the segment report. That is not the intention of the standard. The intention of the standard is, if you have met the continuity, the quantitative threshold in 1 year, then the next period you have to report it for the purposes of continuity. But if in the next year I have not met the continuity criteria, just for the sake of comparison, I had presented it, but I had not met the comparative criteria. Therefore, in the next year, not reportable. It is not reportable. It is reportable only if in the preceding year it had met the quantitative threshold. If it did not meet, you had disclosed in the previous year as a comparative of the year before that, then there is no need for you to disclose in FY 21-22. FY 21-22. It will go a little bit beyond 9. It will go a little bit beyond 9. Okay. So if you follow the continuity principle, will it not lead to reporting of all or major which may not? It will happen. It will happen. See, ultimately, this is now going beyond the 75% threshold. Okay. So there could be a case where one of these segments was reported in the previous period, but now it is no longer there. Now you've already met the 10% criteria, 75% threshold without including that segment. But because of continuity, you will have to include that. So you are reporting more than what is required, which is perfectly fine, Okay. So that is what you will have to take it. Okay, so that is continuity principle. Acha, iska opposite bhi ho sakta hai. The opposite also can happen. That means what? Previous years the segment was not reported as a separate segment. However, this year you have met the criteria and therefore it becomes a reportable segment. So what you should do, you should in your comparative figures take the data for the previous years also and compare it, even if it did not meet the 10% criteria. That means what? In FY 2019-20, it was below 10%. So not reported. Below 10%, below 75%, everything. In FY 2021, it crosses 10%. It crosses 10% and therefore you will report it now. You will report it in FY 2021 figures. But for continuity's sake, for comparison's sake, you will also prepare figures for 2019-20, even if it is below 10%. Whatever, 10% profit, 10% assets, 10% revenue, whatever 10% threshold, you will still report it. Only if the standard gives you this exclusion, you will not report if the data is not available, unless the information is not available and the cost to develop would be very high. This is a very standard disclaimer which is put. So this you will have to take this. Okay, so Anuj, हमारा सोच एक साथ चल रहा है. आपने पूछा, मैंने बता दिया. 10% से ज्यादा हो गया तो क्या होगा? Okay. So should we apply continuity principle before 75%? No, you will apply after the 75% principle. After the 75% principle. Okay. And then there is a practical limit which is put, which is 10, but the option is left to the management. This is because you don't want to give a thesis. Abhi annual report, already if you just look at a balance sheets of any company, the balance sheet itself, the annual report, balance sheet, P&L notes, everything runs to about 150 to 200 pages. Now the management tries to put all the segments that it has identified by the CODM, then it will become a 600-700 page bulky document. The purpose of disclosure itself is lost. Who will look at the financial? Do you think you will even look at a 500-600 page document? आप लोग ये course है, इसके लिए we are looking at a 600 page book, right? Otherwise, given a choice, I would not really look at it. At least that was how I was. Okay, so therefore the 10 segment principle, limit yourself to 10. But again, this is not a rule. This is not a rule. This is just for convenience. Okay. The management discretion principle means anything which the management feels will add value to the reader of financial statements. They do not meet the thresholds, may be considered reportable and separately disclosed if the management believes that information about the segment would be useful to the users of financial statements. Extra. This hardly anybody does. So ye to nahi hoga. Okay, but anyways, the standard has put that. Okay. And you shall prepare separately a residual category. Other business activity and segments that are not reportable shall be combined and disclosed in all other segments. So these are operating segments in their own right, yes. But because they don't meet the quantitative threshold, so you will be not reporting them. So you will aggregate and show them under all other segments. Okay, this is what you are going to do. Okay, so with that, we come to the end of the thresholds. Okay, so if I quickly do some questions for you, you don't have to really write down. These are more of common sense questions. these are more of common sense questions. Okay. So Shraddha, presenting comparative data means you need not present current year data for which the segment condition is not met. How will you prepare? Comparative means this year you have met the criteria, so previous year you are disclosing. Continuity means previous year you had met, current year is not met. If you have not met in current year, not met in previous year, both the years it will go in other segments. Okay, so that is how you will be preparing. Okay, Shraddha. So I hope you have understood that part. Okay, so now these are some small questions which are there. See, we discuss a lot of theory and we ultimately boil down to very less time questions. Okay, and ultimately, I go back with the tagline that Aditya sir ka lecture kabhi time pe khatam hi nahi hota hai. ठीक है? But what to do? You people are also so persuasive. Okay, which is a good thing. You get your doubts sorted out, and that is a good part about it. Okay, JK has 10 segments. The share of revenue, profit or loss and assets of each of these 10 segments are given below. The company has identified H, I and J for reporting. Okay, so this is identified, this is identified, this is identified. Okay, comment on the adequacy of reporting, assuming that inter-segment revenues are nil. Okay, so H and I together contribute 40% of the revenue. J contributes 25%. So this comes to 65% of revenue. Profit and loss, both of them have crossed the 10% threshold. J also has crossed the 10% threshold. Similarly, assets, 20% each, so more than 10, 4%, which is not meeting the criteria. Okay, whereas when you talk about revenue of A, B, C, D, E, F, G, it is below 10%. So revenue criteria, these would ideally not be reportable. This is also 5% below 10%. So this is not reportable, and 8% each. So this also is not reportable because all of this are below 10%. Look at the rates. All of these are below 10%. So if I look at the 10% criteria, H, I and J have fulfilled it. H, I and J have fulfilled it. The company is right in not reporting A, B, C, D, E, F, G under the basic threshold of 10% because they are not meeting the 10% criteria. But the additional requirement of 75% is not met. The additional requirement of 75% is not met. So therefore, out of A, B, C, D, E, F, G, report any two segments because each of them is 5. So 5 plus 5, 10. That gives you 75%. So though these segments do not meet the 10% criterion, you will still report any two out of that because you have to meet the 75% requirement. You have to meet the 75% requirement. Okay, that is right. Okay, so Amita, I've received your email. I'll be responding to it. Okay, I've received your email. In management discretion principle, info must be obtained from the CODM by the finance department. That is right. That is right. Okay, that is right. Sir, is combined segment revenue and entity revenue the one and the same thing? No. No. Entity revenue is external revenue. That means you remove the internal transfers that happen. Only what is reported in your P&L, that becomes entity revenue. Segment revenues means what? It means external revenue of each segment plus internal revenues also. So the 10% criterion, is based on internal plus external revenues, whereas the 75% criterion is based on external revenues only. Okay, that's right, Anuj. That's right. Okay, so question 4 is done. I will leave question 5 for homework because I have a bigger question to do for you. I have a bigger question. We will do question number 6. We will do question number 6. Okay. This is a bigger question, a nice question to do. Okay. So let us pick up question 6. Okay. And I hope that you don't mind it. Okay. Because it's you can try that other question which I left. Okay. Abhijit Limited has 8 segments, information of which is given as under. External sales are given, inter-segment sales are given, total revenue is given. Okay. Segment result, profit or loss is given, segment assets are given. Okay. Now, identify which of the above constitute reportable segments if you were informed that A, B, C, and E were the reported segments in the last financial year. This is a beautiful question because it summarizes all my provisions. It summarizes all my provisions. It is a very, very old question, but the principles are the same. So I will do this question because it summarizes the 10% criterion. It summarizes the 75% threshold as well as the continuity principle also. So if we do this one question, it kind of completes my entire revision. It kind of completes my entire revision. Okay. All right. Fine. Next. Okay. Next one. Let us do this now. We try this question 6. Okay. Question 6. Okay, fine. I'm having A, B, C, D, E, F, G, H. E, F, G, H. Now, external revenue, segment revenue. Okay. Now this will come to note down all of these. Okay. Nil, 200. The next one is 510, 120. The next one is 30, 60, 20, 10. 30, 60, 20, 10, 30, 0, 100, 0, okay, 40, 10, 70, 0, 40, 10, 70, 0. Okay, so the total revenue comes to 200, 630, 90, 30, 30, 100, 50, 70. Okay. Divided by total segment revenue. Total segment revenue. What is my segment revenue? Is it 800? No, that is only external. Is it 400? No, that is only internal. This is my segment revenue figure. Total revenue is my segment revenue figure. So I will divide each of them by 1200. Each of them by 1200. Okay. You may write it down or you may just see and note down later. Okay. You may just see and note down later. So this comes to 16.7%. This comes to 52.5%. 90 divided by 1200 comes to 7.5%. This is 2.5%. 2.5%. 100 by 1200 comes to 8.3%. 50 by 1200, that comes to 4.2%. And finally, 70 by 1200 comes to 5.8%. Okay, so this is the percentage that you are having. Okay, under the revenue criteria, what is satisfied? A is more than 10%, B is more than 10%. That's it. So just A and B is satisfied. Okay, the next one is, this is the revenue. This is revenue. The next one is assets. We will look at assets. Okay. So what are my assets? 45, 141, 15. 45, 141, 15, 33, 9, 15, 15, 27. 15, 15, 27. So total you divide by 300. 300. Okay, total of this is 300. 300. 300. Yeah. So 45 by 300. This gives us 15%. 141 by 300, 47%. 15 by 300 gives me 5%. 33 by 300 gives you 11%. 9 by 300, 3%. This is 5%, 5%, and this is 9%. So here, at least 10% of the segment revenue. So A is met, D is met, and B is met. Okay, so at least 10%. This is going to be your reportable segments for assets perspective. Okay, and finally, if you look at profits, now do I have losses in between? Yes. So therefore, absolute terms, therefore you will look at it in absolute terms. Okay, so profit is something like this. Okay, 10, 30, 16, 10, 14. Okay, 30, 16, 10, and 14. So profit comes to 80. Okay, profit comes to 80. Loss is 180, 10, 10. 180 for B, 10, 10. Okay, so 180, 10, and 10. So this is 200. So in absolute terms, what is higher? 200 is higher. So 200 into 10%. So higher is 200 into 10%. That is 20. So what are my profit figures? 10, 180. So now what will be your reportable segments? At least 20 in absolute terms. At least 20. So therefore, is 10 less than 20? Yes. Is minus 180? Don't look at minus. Look at the absolute. Is it more than 120? Yes. So this is reportable. Is 30 more than? Yes. So this is reportable. Is 10, 16, 10, 10, 14 more than 20? No. These are not reportable. So therefore, what are your reportable segments now? What are your reportable segments? Reportable segments are A, B, C, and D, right? A, B, C, and D are reportable, and there is a continuity. Last year, E was also reportable. So you will report E as well. Continuity, and these you will report last year as well for the purposes of comparison. Report in comparative column. So A, B, C, D, E is done. Okay. Now, is the question over? Unfortunately, no. You will now have to look at whether my threshold is met. Okay. A, B, C, D, E also will come because of continuity principle. So we know that. Okay. Now you will look at the threshold figure, the 75% threshold. So you are reporting, sir, A, B, C, D, and E. Okay. So 510 plus 30 plus 20 plus 30. So 510, 30, 20, 30. So that comes to 590. Okay, so revenue, therefore, revenue, external revenue of A, B, C, D, E is equal to 590. What is 75% of 800? External revenue you have to see. So 800 into 75%. So this comes to 600. 800 into 75% is equal to 600. You have covered 590. You have to cover 600. So from F, G and H, from this lot, you will select any other segment to report. You will select any of it. So 100 or 40 or 70, any of it you can select, because you have to just cover 10. So you can select F, G and H. By convention, we take the one that has the maximum revenue. That is F. That is F. So G and H will go under other segments. Okay, A, B, C, D, E, F. This is for 75% threshold. And once this is done, A, B, C, D, E, F, G and H, you can put in others. G and H, you can put in others. Okay. All right. So thank you, Preeti. You see, being with you guys is probably the best that could have ever happened for me as well. Okay. So it's like the sentiments are mutual for all of us. Okay, that is what, Namita, you should select F as it is bigger, so convention goes with F. Okay, so yeah, the feeling is mutual. Okay, it's not like this is probably the best time of the day when I'm with you, sitting with you virtually. Okay, so this is the best time of my day at least. Okay, so I hope the question is clear, and you do just this one question. You do question number 6, and I can tell you that all the thresholds are covered. We covered 10% revenue, profits with losses in between. We covered assets, and we have also covered the 75% threshold, continuity and comparison. So all of it is done. So you should not have any problem in the remaining questions of this chapter. Yes. अरे नहीं, वो लेट से होगा ना, 12 बजे के आसपास, तो 10 के आगे से होगा वो, ठीक है. So this is done, guys. So question number 6 is done. So now if I have to tell you, try to do question number 1. देखो, these are all very small questions now. Question number 6 that I took from some old exam, that is a very huge question covering all the details. ये तो फिर भी छोटा question है. Okay, you should be able to do that. You should be able to do illustration 8. Okay, all these are very simple questions. Question 5 also you should be able to do now. 4 I did for you. 5, all these questions you can try. I'm left with one question, and that should complete my do illustration 10 theoretical. Achha, there are 2 to 3 things, just closing points. Okay, we should close up in the next 5-10 minutes. Okay, it is quite possible that the CODM would be using a different accounting policy, Like he may be using weighted average to get his MIS reports, but for the purpose of reporting, you use FIFO, for example, or he may be using LIFO for the purpose of his analysis. That is left up to him, but LIFO is not permitted. Okay, LIFO is not permitted in Ind AS. So you have to follow FIFO or weighted average. Abhi kyun karte hai? Why does he take LIFO? That I cannot answer as a financial reporting person. That is his prerogative. He probably thinks LIFO is the best representative of the value of inventory. Okay, and therefore he chooses to follow LIFO. So in your operating segment, when you compare the profits, when you compare the revenues, these are all essentially from those MIS data figures. So you will be taking the operating segment report based on what the CODM does. Don't use your head. Don't imagine. use what he does and close your operating segment report. Okay, so entity uses weighted average cost formula to assign cost to inventories, but reports provided to CODM uses the first in first out method. So which cost formula should be used for Ind AS? You will have to use what the CODM does. That is, you use the FIFO. That is, you use the FIFO. Okay, so that is it. Okay, sir, why highest required? Because only 10. Okay, we are still in the earlier question. I got some doubts. That is what I told. It is just convention. Okay, Shraddha. So you can use G also. You can use H also. Anything is fine because only 10 is required. Continuity criteria. See, you read the question, Sagar. E was reported last year. Okay, where did that question go? E was reported last year. Okay, it was informed that E were in the reported segments in the last financial year, right? So, based on your analysis, only A, B, C, D is reportable in the current year, not E, because E is below. Look at E's figures. Revenue is 2.5%. Sorry, this is D. E revenue is 2.5, assets is 3, and profit is 16, which is below 20, which is less than 20. Okay. Sorry for the untidy presentation, okay, which is less than 20. So in this year, E is actually not reportable. But last year you had reported, therefore I am reporting it in the current year. Okay. So this, this is what you will take it. Okay. So F is the 75% threshold. Okay. Now, Tejal has asked a question. It is agreed that anyone, F, G, H can be taken for meeting 75% threshold. But shouldn't that decision or choice be with the CODM? Look, you go with the CODM and ask him what are the segments. He will say, look, I have A, B, C, D, E, F, G, H. Now do whatever you want and get lost from here. I have my work to do. That is exactly what CODMs do. They don't care about financial reporting. Now you are the manager. Now you have to now apply your judgment because the CODM gave his judgment to you. The CODM has given his judgment to you. Okay. He says, these are my 8. Now you will go to him and say, what should I report? Arey Baba, I have given you 8. No, what else you want? This is exactly what a CODM will tell you. This is exactly what the CODM will tell you. Okay. Sir, how can we come to know in the next year that E is reported just because it met condition? I do not know. I am preparing the report for current year. No, Shraddha. I am preparing the report for the current year. No. So I know that previous year E was reported. So current year I will report E. Current year I will report E. Okay. So that is the reason you will report E. Okay, it's not like something that we are doing in the future. We have the data for the current year. So therefore, we will report in the current year. Okay. So Sagar, I hope you got the continuity part. Okay. I hope you got the continuity part. Okay. And I hope that we were discussing that accounting policies. So please follow the policy that the entity please follow the policy that CODM does for the purposes of Ind AS disclosure. You follow FIFO. Achha, sir, if I follow FIFO, there will be a difference in my figures because FIFO figures will obviously give different profits as compared to what is reported in the financial statements. Definitely, they will give different figures. So then you will reconcile with the actual P&L. You will then do a reconciliation. So for the purpose of operating segment, you will be having the Ind AS 108 as per FIFO, but to tie it up with your profit and loss figures, you will do a reconciliation. Okay. So this is something that was there. And the last part, I want you guys to do this question. It has come in exam. for 10 marks. Okay. So what all is needed, I will quickly take you through the segment report. Okay. So what are the facts is there are two business segments. One is quoting and others. Okay. So this is what is your segments. So quoting, others and total. So what I will present is external revenue, which is net of tax, but you will take other operating income like scrap sales, whatever is generated from operations, whatever is come from operations, you will take that. So 40, 15 and 55, total revenue 2,35,000, 82 and 3,70,000. The next one is segment results, that is your profit. The segment results, that is your profit, which is given to you in the question, 10,000 and 4,000. The next thing that you will take is unallocated income. Okay, Kalyani's question was there regarding corporate office assets or head office assets. That is going to come here. Okay, unallocated income will be a part of reconciliation. Ultimately, the figures in the P&L, the segment report have to tie up with each other. They have to match each other. So you will then present a reconciliation. Income net of expense 30 crores. So we have added it here 3,000. Okay. Profit before interest, tax, etc. Then interest and bank charges is generally not segment wise. It is the entity wise. So iske liye bhi we will do it in the RECO minus 2,000. Income tax expense. This is also for the entity. So it will come in the reconciliation. So you have income tax, profit before tax. Income tax is current and deferred. That gives you profit after tax 13,000. Fine. The next part you have assets, other information. First is assets. Segment assets, the split is given to you 50 and 30. You have unallocated investments. Now unallocated investments will be taken here. And finally, you have unallocated assets. Now, these are assets like corporate office building, head office building, which cannot be allocated to an operating segment. So you will take them as a part of reconciliation in your operating segment report. Okay. So segment assets, investments, unallocated assets, total assets. Then you will have segment liabilities, which are identifiable. Segment liabilities is not the basis that we are. Segment liability is not the basis for deciding the threshold, but reporting time we have to report. Segments could have its own liabilities like trade payables of the segment. So you will report it separately. So segment liabilities, you can just brush this up later on. Okay, it's a very simple report, just presentation, nothing else. Then you have certain unallocated liabilities, reserves and surplus and share capital. So these go as a non-allocable. However, unallocated assets, when I talk about secondary segment report, now unallocated assets may be unallocated for business purposes. However, they could be allocated on a geographical basis. They could be allocated on a geographical basis. So therefore, to that extent, yes, this answer needs to change. Okay. This answer needs to change. It cannot be 1 lakh because 10,000 is investment, which is a non-operating item. So this cannot be 1 lakh. It has to be 90,000. It has to be 90,000. How you will do the split is not known to you. Probably, I don't know whether the question is modified or not. Okay. Nothing is given. Okay. So therefore, it's not given. Probably these are assumed figures. Okay. So therefore, you will have to look from that perspective. Okay. Is this the question or the answer? This is the answer. Yes. Correct. So this 1 lakh, I am not comfortable with this. Okay. I told you why. Assets means it is an operating segment report. Operating segment should include only operating items. So it should be 90,000 in my humble opinion. Okay. Reasoning I have told you. 10,000 is unallocable, which is this investment. Okay. So therefore, please, this is what I have understood after reading the standard. You cannot take 1 lakh here, but the institute has taken. Probably a clarification may come or not. I will just ask. The other thing is capex 7,000. Now this they have assumed to be entirely in India. It is an assumption. Okay. So if you are not clear, you can write the assumption that it is entirely in India. It's entirely in India. Okay. So this is done. You are deducting interest better to reconcile. You are deducting interest to reconcile. Okay. You are deducting interest to reconcile, and it is more like a non-allocable. Oh, where is my question? This is the question. Interest and bank charges you cannot allocate because it is for the entity as a whole. It is not for a particular segment. So therefore, interest and bank charges you will deduct. It is interest paid, bank charges paid. So you will deduct. Ultimately, primary segment report has to match with your P&L, has to match with your balance sheet. Therefore, you will have to deduct it. Okay. So you will have to deduct the unallocated expenses. You will have to add the unallocated income net of expenses. You will have to deduct the income tax expenses, because these are all entity related. They are not allocable to a particular segment. Likewise, investments will always be unallocable because they are not operating investments. They are not operating investments. So therefore, they will always be unallocable. If you think that they are operating, then well, this appears to be right. This appears to be right. Well, you have to write a note for that. Okay. You will have to write a note for that. Okay. So assuming investments to be trade investments, it is quite possible. Okay. So if they are trade investments, you can take it as operating and include it here. But the institute is not clear about it. So therefore, my advice, take it as 90,000 and put a note. Take it as 90 and put a note. Okay. So with that, I think it's clear. Yes, you have to ultimately tally this with the P&L figure in the balance sheet that is presented. Tally this with the balance sheet that is reported. That is the objective. In the secondary segment report, no such tallying is needed. 3 things are needed to be disclosed. Okay. So with that, we conclude our discussion on Ind AS 108. I just have 1 or 2 questions. Sir, it is mentioned in question that D is not reported last year. That is right. So do we disclose the comparatives in the last year as it is? Yes. You will disclose whatever is available for D. You will disclose whatever is available for D. Okay. You will disclose whatever is available for D. Okay. So you will disclose whatever is available for D. Okay. So with that, I will conclude today's session. Yes. There has been a lot of audio video problem towards the end. Just confirm. I also did not see. I was lost in explaining. Towards the end, did you guys understand? Did you guys understand towards the end what has happened? Yes. Or did you guys miss out on many things? Did you guys miss out on many things? Just confirm, please. Did you miss out on many things? Last May, I did not do anything much. Okay, I did not do anything much. It was a normal question. Okay, I was just saying that you ultimately have to match this with your P&L and balance sheet. That is why you deduct interest and bank charges. These are unallocable. And likewise, income also is unallocated. So you will be deducting it. Okay. So this is done. You don't have any exceptional items, etc. These will be deducted. These 10,000 unallocated assets, I think Kalyani had asked, are they, what about corporate assets and head office assets? These are those assets. corporate or head office assets, etc., which you cannot allocate to a particular segment, that is going to come here. Okay, so Kalyani, I think you had that. Okay, I think you had that. Okay, where are other segments info in question 2? That is not there. That is not there. They have not given. Okay, they have just told that operating in coating industry, business segments comprise coating and others. That's it. So that is the only data which is available. So I hope that is the reason we could do it just like that. Okay, all right. So what I have to do from my side now is tomorrow you will get, I will be uploading by tomorrow or latest by day after. First one, EPS Excel sheet, which is the questions I gave you to practice for homework, including the buyback question. So EPS Excel I will give. Ind AS 21 Excel sheet I will give. Those of you who want to check out the formula, the calculations, you can check it out. And operating segments, I don't think I have anything to give. So these two sheets you can get. The third one is the video on common control combinations. Should be doing it by this Sunday. Okay, I'll speak to the institute. Should be doing it by this Sunday. Okay, so that is the reason. Segment liabilities, we do not give the disclosure for geographical information. We only give segment assets. Okay, so 10,000 is non-operating investments. That is what I can think of. Investments are non-operating. Therefore, 10,000 should not come. This should also be 90,000. That is what I think, because this is operating segment report, not non-operating. Okay, so operating segments would not include investments. But suppose these are trade investments. Suppose these are trade investments, then institute is right to include 1 lakh. That is what I had told. Okay, so with this we conclude. Just keep your BOS app or YouTube notifications on, so that you can get this session, common control combination with reverse acquisition, and along with that you will also be getting these 2 Excel sheets. So definitely in the next 1 or 2 days. Okay, so with that we close the session for today. We will be meeting once again. Sometime maybe I think on 18th of September to take up 2 छोटे topics है. आपके standards तो काफी खत्म हो गए, right? So you have 2 small topics from my side that are left. One is CSR and I think one is integrated reporting. So until then, enjoy Amit sir's lecture tomorrow. Okay, it's a very crucial standard. I'm sure you will have lots of important learnings that will happen in the next couple of days. Okay, so this is not my last session. You still have 2 more. Abhi to baki hai thoda sa. ठीक है? The triple C I will give the recorded one. Okay, so we meet on Ind AS, not Ind AS. Ind AS खत्म हो गया. मेरी तरफ से Ind AS is done. Only that triple C reverse acquisition, what is there, I have to give the recorded portion and then we are done. Okay, so that I will share with you. And let me see if any notes or anything is there. I'll try to upload it on the portal. Okay, so for Ind AS, ab baat khatam. Now I have only 2 topics for you. Life, that is CSR, and integrated reporting. Okay, so 2 छोटे topics है. आराम से पढ़िए. Enjoy Ind AS 115. It's a very, very interesting standard. Okay, thank you everyone. Thank you. Triple C, let us see if we get a live session. अच्छा, वो Ind AS 19, all of that I'll put in that only. Okay, सब कुछ Ind AS 19 का 1-2 question, Ind AS triple C in that, and reverse acquisition in that. All of that I'll put in that video and give you. Okay, triple C is very simple, Namita. Don't worry, it's very, very simple. Okay, you will then say that we should not have had it live. Okay, so I can cover. I'll see, but if a live option is there, I cannot commit. It depends on the board of studies. Yes. So thank you everyone. Enjoy 2 weeks of chutti from my side. Okay, I have eaten your heads for the last 10-12 days. Okay, so I'm not very much apologetic about it though, because I think there has been a good learning for me as well. Enjoy your standard. Okay. Yes, definitely. Send me your address. Okay, no problem. All right. So enjoy the sessions tomorrow. Thank you, everyone. Thank you. You've been an awesome batch. Okay, but it's not yet over. We meet again. Okay. Thank you.